Good morning, students, and welcome to the new batch of this your financial reporting paper. And this batch is basically targeting for your November 2024 examination. This time, because of shortage of time, we'll be running this batch in a hybrid manner where we'll be taking recorded as well as live lectures. So first lecture will be taken by our expert CA Alok Garg, and he is our eminent faculty and he is continuously associated with us from our since 2020. So he'll be taking the classes. But before that, I would like you to just navigate to our institute website, what are the BOS inputs which we are providing, which will help you in your learning journey and for excelling for this examination. So let's just move on to our, let me share my screen first. This is our institute's website. From there, if you see student, there is a tab on this menu bar. Students, we click students, we'll find BOS knowledge portal. On the left side, it's BOS knowledge portal. We'll just click this BOS knowledge portal and we'll find, click here to visit BOS knowledge portal. Again, this will navigate you to the personal BOS website. This is your boslive.ici.org. You can directly type this and come to this page also. Otherwise, you can go through institute's website also. Okay. There, if you move down, you'll come with different publications which Board of Studies provide. First is study material, then your Saransh. Saransh is on, if you click Saransh, you'll find on fourth number, Saransh, last mile reference for Indian accounting standards. This Saransh carries summary of all Indian accounting standards. If I click here, you'll find summaries of all Indian accounting standards, which is relevant for you for this November 2024 examination. If I move back, there are study material, students journal, which will update you with the amendments, whatever comes in this your is applicable for your November 2024 examination. Besides that, students, in our this current student journal and as well as in your previous student journal, we have come out with how to prepare for your CA course. In your this April 2024 edition issue of Student Journal, we have come with how to prepare for for CA examination, and in your May 2024 examination, May 2024 issue, we have come out with the examination tips. So please go through these two journals because this will help you in just understanding how should you start preparation, and what are do's and don'ts, what are the examination tips which you should keep in your mind when you are preparing for this particular paper as well as for the whole CA course curriculum. Other informations which will help you in other inputs which will help you in your preparation are revision test papers, suggested answers, your MCQ and case. This MCQ and case scenario booklet is what was there in the previous examination. We are trying to come out with the new booklet also, which will be relevant for your this new scheme. However, right now we have MCQ paper practice portal. Those students who are new, who have not gone through this, they can download the BOS mobile app. They will find one BOS paper practice portal. There they can go and start do online practice of MCQs. However, those who have not downloaded BOS mobile app, they can put here students login. They can use the student login, just go through this final course, enter your registration number, date of birth, and you'll log into your this BOS knowledge, personalized BOS knowledge portal. There you'll find MCQ paper practice online portal tab. From there, you can go through your practice for online MCQs. See, what will happen in this online MCQs, that you'll be finding chapter-wise MCQs for each subject. And within that chapter-wise MCQs, you'll find simple, medium, and difficult level MCQs. Where this you can log in and go for practice. Okay. So I just would like to just tell you that these are the basic inputs which you have to take care, you have to take into account for when you are preparing for this course, especially for this paper financial reporting. Go with each and every question, illustrations, examples given in your study material in each chapter, because they will help you in building your concepts. Besides building your concepts, they will also help you in practice. See, for financial reporting, because it's a technical paper, it's voluminous. So as number of questions you practice, it will help you in understanding the concept. Clarity of the concepts will also build up with the practice of questions. So first go through the concepts and then just practice with the illustrations and test your knowledge questions, which is given at the end of the study material. Okay. And now let me see, in case I'm just stop sharing my screen. And I'll come to the query portal. In case any student has any query, we'll just move on to. Just a minute, students. I'll let me just open the query portal, and in case there are any queries, we'll just address those. Okay, students. Right now, no student has posted their queries, so I'll be there at the end in case any queries, general queries are there, that I'll address. Right now, I'm handling the session 2. See, Alogo, sir. Sir, please, you can take the class now.
Thank you, Shilpa ji, for navigating through this ICAI website. I think this is helpful for the students. I hope my voice is clear. So I'm putting my mic, and please confirm me on my chat box if my voice is reaching to everyone. Am I audible now? I'm also sharing my screen. I hope I'm audible and my screen is also visible.
Sir, there are few queries. Can
Yeah.
I address before you start your session?
Yeah. Good morning, students. My name is CA Alok Garg, and I can see a lot of students have joined. Vanshika, Viraj, Kushal, Jitesh, Bindu, Giriraj, Chandan, Sujay, Ram, Bunjaru, Lokesh, Anita, Prashant, Srinivas, Ram Nishad. Great. Once again, a very good morning and warm welcome to all of you on this batch for November 2024. Students, today we are going to talk about financial reporting paper, right? Today we are going to talk about what is meant for financial reporting, right? What constitutes financial reporting? And in this particular topic, we are going to discuss introduction to IND AS. When I say introduction to IND AS, typically I am talking about introduction to financial reporting, because largely your paper of financial reporting is nothing, it's Indian accounting standard. This paper includes, other than IND AS, this paper includes some bit of professional ethics and some bit of accounting and technology, right? But otherwise, substantially, largely, significantly, this paper includes Indian accounting standards. Knowing Indian accounting standard, knowing the application of Indian accounting standards, understanding Indian accounting standard is the key heart of this entire paper, right? So that is why today in this particular class, we are going to understand Indian accounting standard, how, what is the framework, how this is framed, right? So what is the roadmap and applicability of Indian accounting standard to various entities, and what is the format for preparation of financial statement under IND AS, which is covered under division 2 of schedule 3. So this is the agenda of today's discussion, right? So let me move to the next slide. As I told you, I have bifurcated this agenda into three parts. We'll talk about the introduction to IND AS. We'll talk about the roadmap and applicability of IND AS to various entities in India. Then we will be talking about division 2 of schedule 3. So we will be covering the introduction on these three aspects, right? First of all, we need to understand what are the various framework in India, because you all are CA final students, right? In some way or other, you already have had a experience of financial statement. You have learned accounting standard in your CA intermediate or P2, whatever you call it, right? So you are little bit, I would say, well aware about the accounting standards, AS1 to AS29. In your articleship days, you are auditing or you are preparing the books of accounts, financial statement for probably some non-corporate entities or some corporate entities, right? What is meant by non-corporate entities? Let's say partnership firm, sole proprietorship firm, right? So Hindu undivided family, trust, limited liability partnership. These are the non-corporate entities, right? So if I talk from the layman perspective, any entity in the name of which, at the end of which, if limited or private limited is not there, it is a non-corporate entity, just for the sake of layman understanding, right? So we understood what is non-corporate entity. Now what is a corporate entity? From the layman perspective, corporate entities are those entities where it ends with limited or private limited, right? Limited or private limited. And technically, these corporate entities are incorporated under Companies Act. Okay, Reliance Industries Limited, Lakshman Das Cooperative Private Limited. Okay, so these are typically incorporated under Companies Act. So these are known as corporate entities. Then corporate entities could be listed entities, could be unlisted entities. If an entity is listed in stock exchange, it is called as a listed entity. If it is not listed anywhere, then it is an unlisted entity. So there are a lot of entity structure in India, but largely we bifurcate this entire entity structure either into non-corporate or into corporate, right? Now, what are the different sets of accounting standards in India? Friends, I'm not talking about IND AS right now. I am taking you to your initial days when you have joined CA course, right? So friends, earlier only accounting standard was applicable, right? Whatever you have learned so far, that is only accounting standard. Now these accounting standards are for corporate entities as well as for non-corporate entities, right? So friends, as of now, if I talk about for corporate entities where IND AS is not applicable, sir, on which entities IND AS is not applicable as of now? So for example, any private limited entity or any unlisted entity whose net worth is less than 250 crore. I'm just giving you an example. I'm just setting the context. The applicability I'll cover in detail. Okay. For example, as of now, you have a company name is Ram Kumar Private Limited, right? And the net worth of Ram Kumar Private Limited is less than 250 crores. Okay. On this entity, IND AS is not applicable. Sir, what is applicable? Accounting standards are applicable. Which accounting standard? Accounting standard which are notified under Companies AS Rules 2021. Which accounting standard? Which you have already read, learned, understood in your CA intermediate, right? And these accounting standards are notified by Ministry of Corporate Affairs. Right, friends? How these accounting standards are drafted? It is drafted by Accounting Standard Board of ICAI. Then ASB of ICAI sent these accounting standard to NFRA, National Financial Reporting Authority, which is a wing under MCA. Then NFRA reviews those accounting standards and recommend to MCA. And when MCA notify these accounting standards, it will become law of the land, right? So this is the approval structure of accounting standard in India. And the same approval structure of IND AS is also there in India, right? Accounting Standard Board of ICAI is drafting those accounting standard or IND AS. It is sending to NFRA for their approval. Then NFRA, once approved, it is sending for the MCA for the notification. When MCA come up with the notification, it will become law of the land, right? This is the how, accounting standard or IND AS got notified. Now we were talking about accounting standard. So AS1 to AS29, right? We have accounting standard still live in India, right? Then we have a different set of accounting standard for non-corporate. As you understand, Companies Act is applicable only for the companies. Companies Act is not applicable to partnership, proprietorship, right? So friends, if you have to maintain books of accounts, if you have to audit books of accounts, if you have to apply accounting standard, which accounting standard you will apply for non-corporate entities? So again, AS1 to AS29, you will apply for non-corporate entities those accounting standard which are issued by ICAI, which are issued by ICAI. Sir, then what is the difference between accounting standard for corporate and accounting standard for non-corporate? As you told that AS1 to AS29 in both the cases. Friends, typically, if I talk about from the language perspective, from the content perspective, there is no difference, right? But from the approval perspective, accounting standard for corporate is only applicable when it is notified by Ministry of Corporate Affairs, right? So it has to be approved by Ministry of Corporate Affairs. And that is why when you read the basis of preparation in the financial statement of any corporate entity, they write that these financial statements have been prepared as per accounting standard notified by Ministry of Corporate Affairs, right? Sir, what about non-corporate entity? The accounting standard for non-corporate entity is applicable, which is issued by ICAI. Corporate entities accounting standard are not issued by ICAI. ICAI is drafting accounting standard, sending to NFRA, and NFRA is sending to MCA. When MCA notify, it will become law, right? But for non-corporate, ICAI is not required to share these accounting standard or send this accounting standard to anyone, right? So ICAI himself, as an accounting body of India, ICAI issued accounting standard for non-corporate entities, right? So that is why when you are auditing or preparing financial statement for non-corporate, you cannot write that these financial statement have been prepared as per accounting standard notified by MCA. No, you have to write these financial statement have been prepared as per accounting standard which are issued by ICAI, right friends? So far, we have learned these two sets of accounting standard, corporate, non-corporate. Now, friends, in your financial reporting curriculum, in your CA final, you have to cover Indian accounting standards, right? You have to cover Indian accounting standard. Which Indian accounting standard? Which are notified under Companies IND AS rules 2015. These accounting standard, these Indian accounting standard were notified by MCA when? In 2015. 16 February 2015 was the date when IND AS becomes the highlights of Indian newspaper, right? 16 February 2015, IND AS were notified by Ministry of Corporate Affairs, right? So friends, today we have three sets of accounting standard. For example, you are an article in a well-known CA firm, and that CA firm has a multiple clients. They have a listed companies, they have a unlisted small companies, they have a partnership firm, right? So being an article, you are supposed to apply all these three set of standards, right? IND AS for listed companies, accounting standard notified by MCA for corporate entity on which IND AS is not applicable, and accounting standard issued by ICAI for partnership firm, right? So three sets, but in CA final, only and only Indian accounting standards will be applicable. This is the your bread and butter for CA final. Likewise, friends, if you have to prepare financial statement for a company. And these IND AS are only applicable to corporate entities. These are not applicable to non-corporate entities, right? So in the CA final, you are more inclined towards knowing the applicability of preparation of financial statement for companies, limited or private, right? So friends, if you have to prepare the financial statement, then who gives you the format, right? For example, so let me move to the query box. And for example, Anita. Anita belongs to South India, right? She is from Chennai. Prashant is from, let's say, Kolkata. He is from Eastern region. And Ram is from Central region. For example, he is from Kanpur. Okay. And Tanisha is from Delhi. She is from Northern region, right? And Bindu is from, let's say, Western region. These 5 chartered accountants, although you are potential chartered accountant, but I am calling you guys as a chartered accountant. So these 5 chartered accountants, okay, they have to prepare a financial statement for a company. And all these companies are located in India. So now the financial statement which is prepared by these 5 different chartered accountants located in different region for the different companies, how the format of the financial statement will be consistent, right? कैसे होगा consistent? How it will be consistent? So it will not be consistent until and unless if some regulatory guidance will be there, right? So if someone will give you regulatory guidance, someone will tell you, see, you have to follow this format of financial statement, right? Otherwise, it will not be similar. So that is why, friends, Schedule 3 of Companies Act 2013, Schedule 3 talks about the format of financial statement for companies. That is why if you see any company balance sheet, you will find property, plant and equipment will always be the first item. Am I right? In the balance sheet, property, plant and equipment will always be the first item. How come it is possible that Anita from South and Tanisha from Delhi both are showing the same presentation? How come it is possible? Because both are located in India and the regulatory guidance is Schedule 3. And Schedule 3 says that your balance sheet should start with non-current asset and it should be start with property, plant and equipment, right? That is why it doesn't matter, is it Reliance, Adani, Bharti Airtel, L&T, Nestle, ITC, doesn't matter. Everyone has a first line item as a property, plant and equipment, right? So friend, we have Schedule 3, right? And even in Schedule 3, we have 3 divisions. Division 1 to Schedule 3. This format is only applicable to the companies on which accounting standards are applicable, not IND AS are applicable, right? So Division 1 to Schedule 3 is AS compliant Schedule 3. Division 2 to Schedule 3 is IND AS compliant Schedule 3. So Nestle, ITC, Reliance, Bharti Airtel, all these companies are following Division 2 to Schedule 3, right? So friends, in your CA final curriculum, Division 2 to Schedule 3 is relevant, right? Division 3 to Schedule 3 is again for IND AS companies, but it is for NBFC companies. It is for NBFC companies, right? Sir, what is meant by NBFC companies like HDFC Limited, Sriram Transport and Finance Company Limited, Bajaj Finance Limited, Muthoot Fincorp Limited. These are NBFC companies, right? So friends, from this slide, what is the key takeaway? The key takeaway is we have the various formats, we have the various set of financial statement, a various set of accounting standard in India, but from the CA final perspective, IND AS are applicable and Division 2 to Schedule 3 is applicable, right? And today we are going to talk about the introduction of Indian accounting standard, introduction of Division 2 to Schedule 3, and applicability of Indian accounting standard, right? So this is the key takeaway from this particular slide. So you have to be very meticulous that you have to follow Division 2 to Schedule 3. Many a times when I'm interacting with the students, and for that matter, fresher chartered accountant also. So when I ask that where the format is given for IND AS compliant companies, everyone says that Schedule 3. So you have to be very meticulous. You have to say it is not only Schedule 3, it is Division 2 to Schedule 3, right? If you Google Schedule 3, I don't know, Google will throw Division 1, Division 2, or Division 3. I don't know. So you have to be very meticulous. If you are applying for listed companies or for companies where IND AS is applicable, you have to dig out Division 2 to Schedule 3. Right? Students, I hope the context is clear, right? And we are good to, move ahead. So let me move to the query box. If you have any query, I'll be happy to discuss. I think there is no query so far. Okay, very good. Vanchika has clarified that everything is clear so far. Great, great. Friends, first of all, now we are moving towards what is Indian accounting standards. Before discussing Indian accounting standard, I'll discuss some bit of history of Indian accounting standard, right? Sir, we have our own accounting standards, right, which were applicable since long. Our accounting standard board was formed in 1977, right? Our accounting standard was drafted way back in 1980-81. Sir, what was the need for bringing a different set of accounting standard, which is IND AS in India? Sir, क्यों जरूरत है? Why it is required, right? So friends, today, if I talk about standards in India, so we have two sets of standard, accounting standard and Indian accounting standard. Sir, what was the requirement? What was the need? Friends, the need was globalization. What are these IND AS? These IND AS are nothing. It's a converged version of IFRS applicable to India. And what is the full form of IFRS, friend? What is the full form of IFRS? What is the full form of IFRS? Many students are saying International Financial Reporting Standards, right? Global standard, International Financial Reporting Standard. For me, the full form of IFRS is Intention for Reading Standards. How many of you agree with me? Intention for Reading Standards. If you have an intention for reading standards, IFRS are nothing. IND AS is nothing, right? So I have seen one of the student was asking, is it easy to pass exam, pass CA final exam? So nothing is easy and nothing is difficult. You have the right intention, you have the right efforts, right? And you have to put your best. Okay. So friends, intention for reading standard, this is my definition. Otherwise, whatever you have told me, International Financial Reporting Standard, that is the official full form of IFRS. Okay, great. So the need was due to globalization, and Ram has rightly mentioned that yes, due to globalization. And I will prove this fact with the help of a case study. Okay. So friends, on the screen, there is a gentleman called Mike from France, another gentleman from MeTP from Hong Kong. The third one is Maurice from Kenya. Fourth one, Muko Ono from Japan. Max from Australia, and Mr. Kejriwal from India. These six gentlemen from six different regions, six different territory or country went to London to attend a meeting, right? These six gentlemen went to London to attend a meeting. Now what happened? Mike from France only knows French language, only knows French. Mi Chi from Hong Kong only knows Chinese language. Maurice from Kenya only knows Mandarin language. Muko Ono from Japan only knows Japanese language. Max from Australia only knows English. And Mr. Kejriwal from India only knows Hindi. Friends, these six gentlemen only knows their local language. They are able to communicate, write, read, understand, converse only in their local language. Friends, do you think that their meeting will be fruitful? Do you think that we will have any outcome of that meeting? Do you think that? Everyone is saying no. Why? Why it is no? Because language is the problem. Language is the barrier, right? What is the barrier? Why they are not able to understand each other? Because of language problem, right? Because no one knows Hindi other than Mr. Kejriwal, and other than Mike, no one knows French. So language is the issue. Am I right? Language is the issue. Very good. So language is the problem, and what could be the solution? The solution could be the commonly accepted language, or I would say the common language. For example, whenever you travel in any foreign country, so normally used to speak in English. Even I'm visiting South India, so probably I may be required to speak in English because I don't know Kannada, I don't know Malayalam, I don't know the other languages, but yes, I can speak in English, right? So the third one is, so one of the participant is saying there should be standardization in terms of language, right? For example, if you are working in a MNC company, multinational company, right? So generally you are discussing or you are dealing with the people who are sitting across the world. So of course, if you are dealing with a person who is in France, it is not like you will write in French. You will always write in English, right? You will always write in English. So language is the problem. Likewise, friends, do you know how many countries are there in the world? There are close to 200 countries in the world. 200 countries in the world, right? If I talk about these 200 countries, okay, you know how many gaps are there in the world? Gaps means generally accepted accounting principle. Like in India, we have Indian gap, right? So how many gaps are there in the world? For example, US gap, UK gap, French gap, African gap, Canadian gap, Indian gap, Pakistani gap, Bangladeshi gap, Australian gap, Japanese gap, Hong Kong gap, Chinese gap. So more than 100 gaps are there in the world. Means there are more than 100 ways of accounting and reporting in the world. More than 100. Right. And with this background, Mike wants to invest in the company of Mex. And MeGP wants to invest in the company of Mr. Kejriwal. Morris wants to invest in the company of Mr. Muko Ono. Friends, before investing in any company, what do you need? You need financial statement. But when Morris has to invest, the financial statement of Muko Ono was prepared in Japanese GAAP. The financial statement of Mex is drafted under Australian GAAP. The financial statement of Mr. Kejriwal is drafted under Indian GAAP. And Mike, Morris, or MeGP, they don't understand this different gap. So friends, what is the problem here? What is the problem here? As you said earlier, language was the problem. What is the problem now? Now the problem is reporting language. Now the problem is financial language, reporting language, right? Reporting language. Because they don't understand each other's financial statement. Now, what could be the solution? What could be the solution of this reporting language? Again, same way, there should be some commonly accepted language, reporting language. There should be some commonly accepted gap. There should be standardization of reporting language. There should be standardization of what? Standardization of what? There should be standardization of accounting standard, right? You all agree? You all agree? Now the question is, there are 100 gaps in the world. Whether every country wants to apply Chinese gap, whether every country wants to apply Indian gap, whether every country wants to apply Japanese gap, answer could be no, right? And whatever name I have taken so far, Japanese gap, Australian gap, African gap, Singapore gap. What is common in all these words? What is common in all these words? Which word is common in all these words? And please go by substance, not by the form. So everyone is saying, sir, gap word is common. Gap word is common. US gap, UK gap, French gap, Portuguese gap, Bangladeshi gap, Indian gap, right? Everyone is saying gap word is common. You all agree with me? Yeah? You all are CA final students. Don't you think something else is common here? The prefix. And what is prefix? Name of the country, name of the jurisdiction. Every gap starts with the name of the country. Japanese gap, Indian gap, US gap, UK gap, right? UK gap. So name of the country. So one thing is very clear. All these gaps are designed for the particular country, right? That is why no one wants to apply those gaps consistently across the world. Now, sir, what could be the common, which is acceptable to everyone? Friends, now what is the full form of IFRS again? Not Alok Garg full form. The real full form? International Financial Reporting Standards. Do you find the name of any country in the word IFRS? I don't think so. It is international. It is international. So friends, International Financial Reporting Standards were issued by International Accounting Standard Board. Were issued by International Accounting Standard Board, right? And these are the global standard, and these standards have been drafted with the purpose of, if any country wants to apply these standards, they can apply these standards. So the intention was global intention. The intention was not restricted to any country. That is why there is no name of the country, name of the continent, name of the territory is in the name of IFRS. These are international, right? Second, that is why out of 200 countries, more than 165 countries are using IFRS. I have used the word using IFRS, right? I am not saying applying IFRS. I am saying using IFRS. And how IFRS can be used, we will discuss it. Okay. So friends, more than 165 countries are using IFRS. Do you know what is the size of GDP of the world? Do you know what is the size of GDP of the world? The size of the GDP of the world is 95 trillion US dollars. 95 trillion US dollars. And out of this 95 trillion US dollar, close to 50 trillion US dollar of the GDP is reporting into IFRS. Is reporting into IFRS, right? So see the efficacy of this IFRS. These are the global standards, and these standards are used by 80% of the country, and these standards are used by more than 50% of the GDP of the entire world. Right? So by using IFRS, if everyone will use IFRS, then probably life will become easy for the entire globe. They will be able to understand, with little bit efforts, they will be able to understand the financial statement of other entities, right? The financial statement of other entities. With this background, so let me take you forward. Now, sir, what are the guidance in IFRS? So I'm only talking about the guidance in IFRS, then I'll take you to the IND AS. In IFRS, you know, from 1973. So friends, this International Accounting Standard Board was developed in 1973, right? So friends, from 1973, and please write down this fact, from 1973 to 2001, right? From 1973 to 2001, whatever IFRS, whatever International Financial Reporting Standard were developed, the name was IAS, International Accounting Standard. Friends, earlier, the name of IFRS was different. Earlier, the name of IFRS was different, okay? Earlier, the name of IFRS was IAS, International Accounting Standard. IAS. Okay, IAS, International Accounting Standard. Right? So from 1973 to 2001, from 1973 to 2001, the International Accounting Standard Board developed the standard which was known as International Accounting Standard, IAS. Okay, International Accounting Standard. And at that point of time, friends, they have developed 41 international accounting standards. 41 at that point of time, right? In 2001, they have decided to change the structure. I am talking about globally, right? And they have decided that now it's been 28 years when we started developing IFRS, means IAS. मतलब इन्होंने बोला कि 28 साल हो गए जब हमने स्टैंडर्ड डेवलप करना शुरू किया था, right? So it's been 28 years when we started developing international standards. Now it's a high time to revisit all those international accounting standards, to revisit all those international accounting standards, right? Now the point is, in 3 decades, in 28 years, the size of the economy grew up like anything. The complexity of the transaction grew up like anything. There were a lot of scams which were started happening, frauds which were started happening. So they have decided to revisit the entire structure of international accounting standard, and they have decided that wherever there is a need for changing those standards substantially, they will come out with a new standard under the title of IFRS. So friends, globally you have two set of standard, IFRS plus IAS, right? These are not two sets, the name are two different name, but totally IAS plus IFRS is equal to IFRS, right? So in the name of IFRS, they started issuing the standard after 2001, right? Friends, that is why as of now there are 24 international accounting standard. It was 41. 17 international accounting standard was deleted and 16 IFRS have been issued as of now. So as of now, friends, globally there are 40 standards, 24 under IAS and 16 under IFRS. Is that clear? Is that clear to everyone? Globally, under IFRS, there are two nomenclature, International Accounting Standard and International Financial Reporting Standard. The authority is same. International Accounting Standard are those standards which are issued between 1973 to 2001 under the name of IAS, International Accounting Standard. There were 41 IAS which were issued earlier, but now only 24 IAS are live. 17 IAS have been superseded by IFRS. Okay. And how many IFRS are there? There are 16 IFRS. So total count of the standard is 24 IAS plus 16 IFRS. Understood? There are 40 standards. Okay. And friends, there are some interpretations also, right? Interpretations also. There are some interpretation known as IFRIC interpretation and SIC interpretation. So full form of IFRIC is International Financial Reporting Interpretation Committee. Full form of SIC is Standing Interpretation Committee. So these are the two committees who are helping International Accounting Standard Board in developing IFRS standards. Okay. So these committees issuing some clarification in the standard. Just to give you an example, how many of you are aware about borrowing cost standard? How many of you are aware about borrowing cost standard AS 16? I believe everyone should be aware about the borrowing cost standard AS 16. Yeah. Yes. Many students are saying yes, sir. So students, borrowing cost standard AS 16, you know, the concept under AS 16 is qualifying asset, which takes a substantial period of time, right? The concept of qualifying asset, are you aware? The concept of substantial period of time, are you aware? So, you know, when accounting standard 16 was issued or drafted by ICAI, a question was asked by everyone that what is the meaning of substantial period of time, right? And it was not defined in the standard. Then accounting standard interpretation came, ASI came, accounting standard interpretation came, which says that the substantial period of time means 12 months, more than 12 months, right? So standard has not changed. A clarification came to clarify something in the standard. So that's how IFRIC interpretation and SIC interpretation is a committee which issues clarification in the international standards, right? Be it IFRS or be it IAS. Okay. So friends, globally, to conclude and summarize, globally, there are 24 IAS, International Accounting Standard. There are 16 IFRS, 24 IAS, 15 IFRIC interpretation, and 5 SIC interpretation. So there are total 20 interpretations and there are total 40 standards. Just to remember, 40 standards divided by 2, 20 interpretations. 60 guidances are there. Okay. This was the global picture. This was the global picture. Now coming to the Indian regime. Sir, we understood that, IFRS are the global standard. This was the structure, right? And you told 80% of the countries are using IFRS. Sir, how India becomes the part of that 80%? I'll discuss it. And I was emphasizing on a word that 165 countries are using IFRS. I have emphasized the word using IFRS, right? How someone use IFRS? Friends, for using IFRS, there are two mechanisms. One is adoption, another one is convergence. First of all, let's understand the meaning of the word adoption. What is meant by adoption? Can anyone tell me what is the meaning of adoption? Adopt karna, adopting, right? What is the meaning of the word adoption? Taking as it is, taking others' baby as your baby, as it is, right? Taking as it is means many countries have adopted IFRS. For example, Europe. Europe has adopted IFRS. Entire Europe. For the big companies, they have adopted IFRS since 1st January 2005. Right? And if you read the annual report of, let's say, HSBC Holdings PLC, right? Ram is saying 100% taking, Raj is saying to take it as it is. Priya is saying 100% application. You are right. You are right. Adoption means 100% as it is. So whenever you read any European company's annual report, right, you will find in European company's annual report, you will find, let's say, let's talk about HSBC Holding PLC. This is a company which is listed in London Stock Exchange also. When you read the annual report of that company, and when you go to the basis of preparation para, they write the financial statement of HSBC Holding PLC has been prepared as per international financial reporting standards, which were or which are issued by International Accounting Standard Board and as adopted by European Union and European Financial Reporting Advisory Group. Right? Means Europe has adopted IFRS. This is the meaning of adoption. What is the another one? Another one is convergence. And what is meant by convergence? What is meant by convergence? Convergence means adopting IFRS, then doing some modification in those IFRS. What we did, convergence means changing little bit, modifying little bit. In India, what we did, we have asked the word files from International Accounting Standard Board, London. We have asked the word file for IFRS. Why we have asked for the word file of IFRS? Can any student tell me कि हमने word file क्यों मंगवाई? What was the reason for asking about the word file? from International Accounting Standard Board? You are right, Priya. Priya is saying, sir, we have asked for the Word file because it is easy to change. It is easy to modify, right? You are absolutely bang on. You are absolutely right. So friends, in India, because we were already using accounting standard. Now we were talking about way back in 2015, we were talking about moving from AS to IND AS. Moving from AS to IFRS, not IND AS, AS to IFRS. And there was a significant difference between AS and IFRS. Now the question came, since we had to apply these IFRS to Indian jurisdiction, right? And there were so many companies in India. So friends, we had to implement IFRS according to our economy, according to our jurisdiction, right? Because our economy is a developing economy and we have to take into account the economic environment, political environment, right? The financial environment in India. So friends, with that, we felt a need for modifying these IFRS little bit. The moment you are modifying IFRS, you cannot call it as a IFRS. Like Europe, all European companies are saying, when you ask, how do you prepare their financial statement? They used to say, we are preparing our financial statement, it's for IFRS. But in India, you cannot call it as a IFRS. Then we take the name as IND AS, Indian Accounting Standards. Sir, why we have not taken a name as a Indian Financial Reporting Standards? Because in that case, the short form will again become a IFRS. And on the full form and on the short form, the copyright is with the IASB. And that is why we have taken a name IND AS, Indian Accounting Standard. Our old accounting standard are also Indian, but the name is accounting standard only. But for this new standard, the name is Indian Accounting Standard, IND AS. So friends, sir, then what is the benefit of implementing IFRS in India when we have to change its standard? Friends, do you know what is the quantum of virus or germs which is killed by Dettol? आपने सुना है डिटोल कितने कीटाणु मारता है? आपने एड देखी है डिटोल की? What it says? Radhika is saying 99.9%. 99.99%. Right? And do you know how much part we have copy pasted in our IND AS? Our IND AS are 99.7% cut copy paste of IFRS, close to 99.7% cut copy paste of IFRS. 99.7%. When you round off this 99.7%, what is the outcome? 100%. So friends, we were only talking about some few differences between IFRS and IND AS. But even though if you have to change at one place, you cannot call it as IFRS, right? So friends, just for your understanding, we have not made a substantial change from IFRS to IND AS. We haven't made substantial change. We have made the changes where we felt it is important for our industry, our economy to make that change. We have made that change. And just for your comfort, our IND AS are 99.7% cut copy paste of IFRS. And in many standards, friends, and in many standards, there is no change between IND AS and IFRS. There are total 39 IND AS, right? And I can share a real life story here. 5 years ago, I went to Dubai for taking a lecture on IFRS. In Dubai, IFRS is there. You know, I haven't prepared the presentation on IFRS. And my agenda was IAS 41 on agriculture and IAS 21 on the exchange in foreign exchange rates. So foreign exchange standard. I started working in the flight and I prepared agriculture standard slide, IFRS slide in just 5 minutes. You know, how come it become possible? I was having a slide on IND AS 41. I was having a presentation on IND AS 41. I just removed ND. It become IAS 41. And since there is no change in the content between IND AS 41 and IAS 41, my slide become ready. So friends, for example, if you read IND AS and you got an opportunity to get interviewed in a MNC company, you have to be a smart person only. You just need to know, should I say IND AS or should I say IFRS? Should I use IND AS 1 or should I use IAS? That's all. What about IND AS 21 presentation, foreign exchange standard presentation? There was only two change between the foreign exchange standard. Another presentation was also become ready in next 10 minutes. So in 15 minutes, I was able to prepare two standard presentation in IFRS. How come it is possible? Because the content is same, right? Is that clear? Is that clear? So we have made little changes in our IND AS curriculum, in our IND AS, and we call those three changes in three parts. Number one, carve out. Number two, carve in. Number three, removal of options, right? And we have classified these changes into three parts. Carve out, carve in, removal of options. Sir, what is meant by carve out? Carve out means applying a different treatment in IND AS. IFRS says X treatment, we are saying Y treatment, right? So friends, we have almost 10 carve outs between IFRS and IND AS. I am talking about 1,000-page literature. Among 1,000-page literature, we have made only 10 deviation from IFRS. मतलब 10 जगह पे हमने different accounting treatment apply किया है. At 10 places, we have applied different accounting treatment, right? That is carve out. And I'll take one example here. Please confirm if my Excel file is visible, friends. Please confirm if my Excel file is visible. Whether my Excel file is visible to everyone? Can anyone confirm if the Excel is visible? Yes. Okay. I am giving you one of the example of carve out. Carve out means applying different treatment in IND AS. Different from where? Different from IFRS, right? We are talking about change from IFRS. Friends, let's say I'm talking about IND AS 1 and IND AS 10. In IFRS, there is a standard IAS 1 and IAS 10. International Accounting Standard 1 and International Accounting Standard 10. This IAS 1 talks about presentation of financial statement. IAS 10 talks about events occurring after balance sheet date, reporting date. Same way, we have IND AS 1 and IND AS 10. IND AS 1 talks about presentation of financial statement. This is the next agenda, next day agenda. IND AS 10 talks about events occurring after reporting date. Friends, in IFRS, I mean to say in IAS 1 and IAS 10, there is a concept. I'll explain this concept, right? Let's say, friend, the reporting date is 31st March 22. The balance sheet closes on 31st March 22. The company has taken a long-term loan on, let's say, I'll use here 1st January 2022. 1st January 2022. A period of 5 years. So, friend, on the reporting date, on 31st March 22, whether this loan will be classified as current or whether this loan will be classified as non-current. Please tell me. In IFRS, IND AS, AS, what is your view? On 31st March 22, whether this loan has to be classified as current or non-current? I'm just asking from the logic. Sujay is saying non-current. Radhika is saying non-current. Priya is saying non-current. Yes, you all are right. It has to be non-current, right? The concept is same everywhere. Non-current. In IND AS, IND AS classification is also non-current. Even in AS, it is non-current, right? In accounting standard, it is also non-current. Now, friends, what happened? On the reporting date, the company has made a violation of loan covenants. What is meant by loan covenants? The terms and condition of the loan, right? For example, whenever the companies are taking loan from the bank, right? For example, they are taking term loan from the bank. The bank says that you have to utilize, you have to use this term loan only for these limited purposes, right? And bank also says that since you are taking a loan from me, you have to submit a stock statement, debtors and creditors statement, financial statement, etc., at a regular interval, right? So on 31st March 22, the company has made a violation of loan covenants, and due to this, the loan become repayable on demand, right? First of all, we all agree this is a non-current, but after hearing this, that on 31st March 22, due to an event, the loan becomes repayable on demand. Now, please tell me what should be the right classification of this loan? Should it be current or should it be non-current? Friends, what is your answer now? I am waiting for the answer. Ramoy is saying, sir, it should be current. You are right. It should be current because due to the violation of loan terms and condition, this loan becomes repayable on demand now. It becomes current in IFRS also, in IND AS also, right? So far, IFRS IND AS, we are on the same page. Now, friends, I am giving you more information. I am giving you more information. I can see a lot of participation from the student. Sujay, Abhishek, Vanshika, Abrakesh, Giriraj, Bindu, Tanisha. So Bindu, it should not be non-current. Abrakesh, it should be not be non-current because now it becomes repayable on demand. So if it becomes repayable on demand, it becomes current, right? Now, friends, on the reporting date, we all agreed earlier it was non-current, but due to this event, it becomes current, right? And friends, the financial statement of the companies are getting approved in the board meeting, right? The financial statement does not getting prepared. The financial statement does not approved in on 31st March itself. It is approved in the board meeting, and the board meeting happens 30 days, 40 days, 45 days after it. Right? For example, Infosys Limited, TCS Limited. So their board meeting was on 20th or 21st of April, right? But the financial closes on 31st March. Now, it is written that more facts were given. The financial statements are going to be approved or adopted in the board meeting. The financial statements are going to be approved or adopted in the board meeting scheduled on 15th May 2022. In the month of April, just give me a minute. Yes, in the month of April, the management talked with the bank and the bank agreed to waive the violation and will not demand the payment immediately and will go by the old terms. Friends, few facts are given here, and it says that first of all, the financial statement for 31st March 22 is going to be approved in the board meeting dated 15th May 22, right? मतलब 1.5 महीने के बाद ये फाइनेंशियल स्टेटमेंट अप्रूव होंगे. And in between means in the month of April, the management spoke with the bank and the bank agreed, okay, this loan is no more repayable on demand. So whatever old term was there means after 5 years, we will go by the old terms. The bank agreed. And friends, you understand in case of companies, the financial statement becomes public, right? For example, for listed companies, the results are getting uploaded to the stock exchange, shared with the investors and shareholders only when in the board meeting the financial statements got approved, right? It got approved. Is that okay? So friends, the difference between the reporting date and the approval date in the board meeting is called as the events occurring after balance sheet date. You remember accounting standard 4, AS4 याद है? इसमें से कितने लोगों को AS4 याद है? आप जहां पे भी बैठे हो वहीं से हाथ खड़ा करो. Please raise your hand. How many of you remember AS4? And I can see from my third eye, I can see many of you are raising hand and you are saying that yes, we are aware about accounting standard 4, events occurring after balance sheet date, adjusting event, non-adjusting event. We remember that concept. The same concept is there in IND AS and IFRS also, right? So friends, this event is a event occurring after balance sheet date. Right? Now IFRS says that, if I talk about IFRS says that this event is a non-adjusting event. This event is a non-adjusting event. And we will continue to show this loan as a current. But we said in IND AS 1 and IND AS 10, we said our Indian economy is a developing economy, right? And in our economy, the banker demands so many things while giving a loan, like stock statement, debtor statement, creditor statement, inventory statement, financial statement. There are a lot of procedural things, right? And we are developing economy. So we all agree that on the reporting date, if due to violation, this loan become repayable on demand, we agree that in IND AS we'll call it as a current. But before the financial statement published to the public or regulator, if we have corrected, right? Like in this case, we have corrected the situation and bank also agreed that, okay, I'm not demanding you payment anymore. Bank also agreed. Right? If we have corrected, then we will consider this event as an adjusting event, right? And we will continue to show this loan as a non-current. Logical also, because what happened in the next year, please tell me. When on 31st March 2023 you will come, the remaining maturity of the loan is 3 years and 9 months. Again, it will be non-current. Then why to show current now? If everything is got fixed, if everything is corrected, then why to show as a current? Okay. So friends, this is a kind of a change which we brought in our IND AS 1 and IND AS 10. This is known as a carve out. This is one of the example I have taken, right? I hope you have understood the meaning of carve out. Carve out means applying a different treatment in IND AS. In IFRS, it will remain current, right? In the next year, it will become non-current, but in the current year, it will become current. Sujay is saying if condition present on balance sheet date and it is confirmed before approval, then adjusting event. You are right. Okay. Friends, now another one is, we understood the carve out. Now the next one is carve in. Friends, we have one carve in. Carve in means putting additional guidance in IND AS, right? And friends, I'm just giving you example of carve out, carve in. I'm not teaching you IFRS 3, IND AS 103. The sessions will come. Friends, you must have read accounting standard 14, accounting for amalgamations, right? And you have also read accounting in the nature of merger, in the nature of purchase method. I believe you have had a conversation on accounting the nature of merger, accounting the nature of purchase. Friends, likewise in IFRS, there is a standard called IFRS 3 and the name is business combination. This standard deals with all the merger and acquisitions. Friends, in IND AS, we have IND AS 103 which also deals with all the merger and acquisition, business combination standard. Now, friends, in IFRS says that if you are acquiring any business, if you are doing any merger and acquisition, you have to acquire or you have to do the accounting of this merger and acquisition on the basis of fair value. Means you have to fair value all the assets and liabilities in the books of accounts. Friends, in our accounting standard, the concept of fair value was not there. It was a choice. The concept of book value was there. But in IFRS, the concept of fair value was there. We said, okay, we will also apply fair value method. But we said that if a group company is acquiring another group company, you understand? If one of the family member is acquiring another family member, then we will not applying fair value method. We will apply pooling of interest method. We will apply book value method. Right. Sir, what does it mean? It means in a common control transaction, right? You must have heard that, Bharti Airtel has acquired, let's say, Netel, or Bharti Airtel has demerged Netel. Netel was a subsidiary of Bharti Airtel, or it was a separate company. You heard that, Reliance has demerged Jio Financial Services Limited. You heard about Jio Financial Services Limited? Now the stock price is almost 400 rupees. You heard about that? So Jio Financial came out from Reliance Industries, right? So friends, we said that we will apply the entire accounting of IFRS 3. But if there is a group entity acquisition or common control acquisition, we will apply book value method. This is the additional guidance which we have inserted in IND AS. Example, A Limited is a parent company of B Limited. Then B is a subsidiary of A. A Limited is also a parent company of C Limited. Again, C becomes a subsidiary. In this case, A is the parent and B and C are the two subsidiaries. Okay. B and C are the two subsidiaries. Now, friends, D is a subsidiary of C Limited. C is a parent of D Limited. So first A Limited is there. So let me draw this chart here. Sorry. Let me draw this chart. Here is A. A is a parent. Now A has two subsidiary B and C. These are the two subsidiaries. So A is the parent of B, A is the parent of C. Now C is the parent of D, right? So D is the grandson of A, right? Now friends, D is acquired by B. D is acquired by B. So earlier D was the subsidiary of C, now D becomes subsidiary of B. So this is a common control acquisition. Even before acquisition, A was the grandfather of D. Even after acquisition, A is still grandfather of D. Acquisition से पहले भी A grandfather था और acquisition के बाद भी A grandfather है. So this is known as a common control acquisition. So group entities are acquiring another group entities, right? So this is known as a common control transaction. So in this case, friends, standard says that we will account for this group entity acquisition on the basis of pooling of interest method. I am only giving you the example of Carve. I'm not teaching you pooling of interest method, right? You will learn pooling of interest method when you will attend the class on IND AS 103, right? Understood? Understood this pooling of understood this Carve? So we have inserted one additional guidance in IND AS which was not there in IFRS. The third kind of change is removal of option. The third change is removal of option. What is this change? Removal of option. Standard says that removal of option. Removal of option means removing the option. In IFRS, at two places, more than one option is given. How many of you remember AS 10, property, plant and equipment standard? How many of you remember AS10? Many of you remember. Many students are saying, sir, we remember. In property, plant and equipment, how many of you remember the subsequent measurement, cost and revaluation? How many of you remember cost or revaluation? I can see many are raising hands. I can see from my third eye. Yes, many are saying that, sir, we remember cost model, revaluation model. Friend, in AS10, the accounting standard was giving you twice option for a subsequent measurement of PP&E. Likewise, in IFRS, at many places, the standard give you choices, options of multiple options for a accounting treatment. Okay. So friends, we have IAS1, International Accounting Standard 1 globally on presentation of financial statement, and IND AS1 in India on presentation of financial statement. So friends, in profit and loss account, IFRS says that the expense can be classified either by function method or by nature method. Are you getting me? IFRS, when I say IFRS, means IAS1, the standard. In IFRS, it says that in profit and loss account, you can classify your expenses either by the function method or by the nature method. Sir, we don't know function and nature method. I'll explain. But in IND AS, so in IFRS, there are two choices. In IFRS, there are two choices, either by function or by nature. But in IND AS, we have removed the choice. We have removed the option and we said the expense has to be classified by nature method only. By nature method only. Right? Sir, why we have removed this option and what is meant by this? So friends, let me explain this. Let's say the company has a factory building and the company has an office building. Right? Going by the functional classification, for example, the company has 100 crore rupees of depreciation on office building and 200 crore of depreciation on the factory building. Right? So functional, going by the functional classification means classifying the expenses in the division or department to which it belongs. Right? For example, in this case, 100 crore rupees of depreciation on office building have been shown as an office overhead. 200 crore of depreciation in factory building has been shown as a factory overhead. So this is known as a functional classification of expenses. But if I talk about nature, doesn't matter. It is on factory or it is on office building. What is the nature of this expense? The nature is depreciation. The entire depreciation expense of 300 crore has been shown as a depreciation expenses. Right? This is a nature-based classification. Friends, in IND AS, our IND AS 1 says that, our Schedule 3 of Companies Act says that we have to follow nature-based classification of expenses in the profit and loss account. Right? And this is kind of an option which we have removed. So we have around 3 removal of options in our IND AS guidance. Right? Is that clear? Is that clear, friend? Is that clear? So friends, we discussed, we understood adoption and we understood convergence, and hence India has converged to IFRS, and that is why we are not calling it as a IFRS. Friends, Singapore has also converged to IFRS. Malaysia has also converged to IFRS. In Singapore, they are calling this IFRS as SGFRS, Singapore Financial Reporting Standard. In Malaysia, they are calling it as a MFRS, Malaysian Financial Reporting Standards. Okay. Right? India has converged to IFRS and we call it as IND AS. The difference between IFRS and IND AS is a simple difference of carve out, carve in, and removal of option. Please let me know if you have any questions so far. Please let me know. I hope you guys have well understood the difference between IFRS and IND AS, and how we have drafted IND AS. I hope you guys have well understood this fact. There are only, so Abrakes is asking for how many carve-ins are there. There is only one carve-in. How many carve-outs are there? There are close to 9 to 10 carve-outs. How many removal of options are there? There are 2 to 3 removal of options. Right? One carve-in, one. Great, great. Love to see that, everyone is almost clear, or whatever I have explained so far, everyone is clear now. So friends, and we discussed that we are moving from accounting standard to IND AS regime. We are moving towards global approach, right? So we are moving towards global approach, as I have given you real life example of my Dubai visit, right? So of course, when you prepare a financial statement under IND AS, so if these financial statement has to be sent to the global parent, so probably these financial statement will be converted into IFRS without any effort or with minimal effort. There are 39 Indian accounting standard, and out of 39 Indian accounting standard, a lot of Indian accounting standard talks about fair value concept, right? Of course, these IND AS standards focuses more on reporting rather than only accounting, right? Friends, if I talk about a size of the balance sheet, a size of the financial statement under Indian GAAP, if you are preparing a financial statement under accounting standard, probably the thickness, or I would say the size of the financial statement was scattering in 30 pages, right? But when you prepare the financial statement of the same company in IND AS, it will be close to 50 pages. Why? Because there are a lot of disclosures which are additionally required under IND AS, which was not there in accounting standard, right? So Indian accounting standard provides more weightage to the transparency, provides more weightage to the disclosures, and hence these standards inculcate more culture of reporting also. Substance over form, right? Friends, when you delve into IND AS, for example, IND AS 110, consolidation related standard, you will surprised to know that a company which is holding 35% stake or 40% stake may become a parent company, right? By the concept of de facto control. Again, this is an example of substance over form. Friends, when you will have a session on IND AS 116 leases, you will surprised to see if a lessee has taken a premises on a lease basis, the lessee is capitalizing an asset for the lease, right of use asset for the lease. So it is again a substance based. Friends, if there is a redeemable preference share capital, we were showing that redeemable preference share capital as a equity share capital, because in the form it is a share capital, but in the substance is it a equity? What is meant by equity? आपने किसी कंपनी के शेयर में इन्वेस्ट किया और कंपनी डूब गई, will you get anything? You will not get anything. So equity shareholder has a residual rights, but preference shareholders enjoy the rights before the equity shareholders. So redeemable preference share capital is not an equity, it is a liability. So in IND AS and IFRS, the redeemable preference share capital will show as a liability. So while discussing IND AS 109 on financial instrument, you will find there is a concept of substance over form. While discussing the revenue recognition, IND AS 115, you will surprised to see at a lot of places the substance over form concept was. So Indian accounting standards are more substance based, right? And these standards are more principle based standard rather than rule based. Okay. So these are the just basic things, friends, okay, for your information. IND AS are the Indianized version of IFRS, converged version of IFRS in India. Why? Because these IND AS, not IND AS, IFRS are used in more than 165 countries by way of adoption or conversion. One language will, of course, enhance comparability, understanding one set of books, easy access to global capital market, right? attract foreign investment and low cost of capital. So these are the benefits. As I told you, these standards are more transparent and more visible. Okay. Any question so far? Bindu is asking, sir, you mentioned that there are 16 IFRS. So is the convergence for 16 IFRS? Please guide. Bindu, like in India, we say accounting standards. But someone will ask how many accounting standards, then what you will say? You will say 29, although 27 are effective. But you will say AS1 to AS29, and every standard deals with a separate concept. Like AS1 deals with disclosure of accounting policy. AS22 deals with deferred taxes, right? So Bindu, likewise, IFRS is a subject. IFRS is a subject. It's a concept. But if someone will say how many standards, because every standard deals with a different item. Intangible asset, different standard. Property, plant and equipment, different standard. Impairment, different standard. Cash flow statement, different standard, right? So if someone will ask you how many IFRS standards are there, you will say 40. And how come it is 40? 16 standard in the name of IFRS and 24 standard in the name of IAS. Okay. So IFRS includes IAS also. IAS also. आपने कभी देखा होगा कि surname, the surname of father is different and the surname of son is different. You must have seen, right? You must have seen. Someone is using Bansal or Garg or someone is using Gupta in the family. But again, the family is same. The family is same, right? Likewise, the literature name is IFRS. But how many standard? 40 standard, 4040. 16 in the name of IFRS, 24 in the name of IAS, in the title of IAS. Is that right, Bindu? And if we talk about convergence, so we have all those 40 standards, we have converged 39 Indian accounting standard, right? One IFRS, I mean to say one IAS, we have not converged, right? I hope it is clear now. Is that clear? Before getting into the literature, let's have a 5 minutes break, right? We will join 29 now. So we'll start at 8:35. Let's have a 5 minutes break. Back students. So students, now I'll talk about IND AS literature, right? So how this IND AS literature has been drafted. So students, in total, we have 39 Indian accounting standards, right? So at the first place, you will find IND AS 1 to IND AS 41, right? So students, globally, as I told you, there are two names of IFRS. One is IFRS, another one is IAS. Initially, IAS standard were issued, then IFRS standard were issued. So students, the international accounting standard, wherever IAS 1 to IAS 41 was there, we have issued the standard in the title of IND AS 1 to IND AS 41. Wherever IFRS standards were there, IFRS 1 to IFRS 16, since globally there were two different names, but in India we have only IFRS, we cannot start with again IND AS 1. So for all the IFRS series of standard, we have converged into IND AS 100 plus 1. So IFRS series we have started 100 plus. IAS series we have started 1 plus. Okay. So IFRS 1 IND AS 100 plus 1. IFRS 2 IND AS 100 plus 2. IFRS 16 IND AS 100 plus 16. Okay. This is how we have drafted our Indian accounting standard. And friends, wherever globally interpretations are there, we have incorporated all the interpretation in the form of appendix. I hope my PPT is visible to everyone. Yeah, is it visible? Abhishek is asking, sir, can we get this sheet to download, or can you please provide the Excel sheet and this presentation? This will be very helpful to us. Yes, Abhishek. After this class, I will be sharing this presentation and Excel sheet. Yes. Yeah. Friends, we have total 39 IND AS, but you must be wondering, sir, IND AS 1 to IND AS 41. So have we notified 41 IND AS? And 10126116, have we notified 16 more IND AS? Means in total, have we notified 57 IND AS? Answer is no. So let me again take you on my Excel file where I'll show you how we have drafted our IND AS standard. Friends, can you see this Excel file? I hope this Excel file is visible. I hope this Excel file is visible to everyone. Is it visible? Is it visible to everyone? Yes. Great. Friends, how we have drafted, how we have converged into IND AS, I'll explain here. Friends, you see the first two column, IAS 1 was there. For IAS 1, we have converged IND AS 1. For IAS 2, we have converged IND AS 2. Right? There was no IAS 3456. There was no IAS 3456. These four standards got deleted in globally. These four standards got deleted. Okay. So that is why we have also not notified IAS IND AS 3456. You will not find IND AS 3456. Right. When you go to IND AS numbers, you will find that in between few numbers are missing. Right. Why these numbers are missing? These numbers are missing because globally there are no standards in these numbers. Sir, where these standards have gone globally? These standards have been shifted to IFRS series of standards, right? But as a part of the convergence project, we had to maintain the same numbering system. That is why we have also not converged IND AS 3, 4, 5, 6. Is that okay? IAS 78 is there, we have notified IND AS 78. IS 9 is not there, we have not notified IND AS 9. 10 is there, we have notified. 11 is not there, we have not notified. So these standards we have not notified, right? Friends, likewise, if I talk about, just give me a second. Likewise, if I talk about this IND AS series of standard, Wherever IAS series of standard were not there, we have also kept our IND AS series, IND AS number blank, right? Same way for IFRS, in IFRS series of standard, all the standards are there. In IND AS series also, we have notified IND AS 101 to IND AS 116. You can see there is no gap, no break in between these IND AS 100 series standard. Why? Because there is no break in IFRS series of standard. Is that clear? But for IAS series, we have maintained the same series. In between, wherever the standards are not there, deleted, we have also kept the series blank. I hope everyone is clear about this series of standard. I hope so. Just to summarize, globally, there are total 24 international accounting standards. This is IFRS. These are IND AS. Globally, there are 24 IAS standards. We have only notified 23 IND AS standard. One standard we have not converged. And that standard was on accounting and reporting for retirement benefit plan. We have not converged the counterpart standard of IAS 26, right? Because this standard is largely applicable to trust. And in India, IND AS is not applicable to trust. 16 IFRS, we have converged 16 IND AS also. In total, there are 40 IFRS, including IAS. We have notified 39 IND AS. Now I believe the numbering is clear to everyone. Right? Abrakesh, I have explained you about IAS 26. This IAS 26 is on accounting and reporting by retirement benefit plan. Generally, it is applicable to trust. In India, it is not applicable to trust. I mean to say, on trust, IND AS are not applicable, and hence we have not converged this standard. Right? Great. Now I'm moving to my PowerPoint presentation. We talked about this. In the presentation, I have also given you for your reference. On the extreme left side, I have given you IND AS number, title of the IND AS, counterpart IFRS standard, counterpart accounting standard. I want you guys to print out these 3 slides where I have given this entire list. Just have a print of these 3 slides. Keep it at your study table or at your desktop, wherever in office or at home. Just have a printout and put these on the wall, right? So that you will be able to remember that what are IND AS standard, what are IFRS, what is the counterpart IGAP standard. You can see in place of IGAP, I mean to say accounting standard, at a lot of places it is blank, right? Why? Because we have only 27 accounting standard, but we have 39 IND AS, right? You can see a lot of places new guidances have been come in IND AS. For example, agriculture. There was no accounting standard on agriculture, but now you will read IND AS 41 on agriculture. There was no accounting standard which deals with hyperinflationary economies, but now you have one standard which deals with hyperinflationary economies. Earlier, there was no standard which deals with employee stock option plan. There was a guidance note, but no standard. But now you have a full-fledged standard. Right? There was no standard on insurance contract. Now we have a standard under IND AS. On financial instrument, we have 3 standard. Earlier, in accounting standard, there was no standard, no AS, which was notified on financial instrument. But now we have a standard which is notified on financial instrument. Right? Is that clear? So you can see a lot of guidances under IND AS. So just to summarize, there are 27 notified accounting standard and there are 39 IND AS. There are 39 IND AS. With this, we have completed introduction to IND AS, friends. Now, friends, we have 39 Indian accounting standards, right? And friends, if I talk about the structure of Indian accounting standard, it starts with the objective, right? Like when you read property, plant and equipment IND AS 16 standard, it starts with the objective, and in the objective part it says that the objective of IND AS 16 is to prescribe the accounting treatment of property, plant and equipment and depreciation, right? So friends, every standard has an objective, every standard has a scope. So this is the structure. There could be a case where one of the standard may not have a scope, but this is a structure. First objective, then scope where the standard is applicable, then few definitions will be there, right? Then after definitions, then will be content on recognition, measurement, presentation, disclosures, and then there will be appendix. In the appendix, interpretation have been covered. Friends, for any accounting, please remember there are 4 pillars of accounting. RMPD. What is RMPD? Recognition, measurement, presentation, disclosure. RMPD. These are the 4 pillars of accounting. RMPD. Okay. So friends, with this, I am moving to the next part. Before moving into the next part, if you have any question, I would be happy to answer. I'll take a pause. I'll take a pause for 30 seconds. I'll just I'm going into the query link. So Bindu is asking, sir, is IGAP and IAS the same? Can you interchangeably use gap and IND AS? Please guide. Bindu, first of all, when I'm talking about IGAP means Indian GAAP, Indian generally accepted accounting principles. IGAP is used for the accounting standard in India, accounting standard. Okay. So I cannot use Indian GAAP and IND AS interchangeably. Whenever I'm using IGAP, whenever I'm using Indian GAAP, I'm using for accounting standard. Okay. IND AS are the new guidance. Is that clear? Any question? Any question? Radhika is asking, sir, there are 40 IFRS standard, includes IAS, and there are 39 IND AS. So in our financial reporting subject, so we are only concerned about 39 IND AS. Yes, you are absolutely right, Radhika. Sir, Priyanshi is asking, sir, we have almost 9 to 10 carve outs as you explained, and 1 carve in and 2 to 3 removal of options. Is that right? Yes, you are absolutely right. You are absolutely right. Okay. Rahul is saying, sir, if I correctly summarize, so we have 2 series of Indian accounting standard. One starts with IND AS 1 to IND AS 41, where in between few numbers are missing because of that Excel which we have shown. You are right, Rahul. So between IND AS 1 to 41, of course, IND AS 1 is also there, IND AS 41 is also there, right? So there are only 23 IND AS. 18 IND AS are not there. Why? Because those IND AS have been moved to IFRS. And you are right. In one series is IND AS 1 to IND AS 41, another one is IND AS 101 to IND AS 116. You are absolutely right. Sir, can you repeat full form of SIC? The full form of SIC is Standing Interpretation Committee. Is there any chance that ICAI will issue that one retirement benefit IAS? Yes, Sujay. First of all, it is not about ICAI will issue. ICAI will prepare, NFRA will recommend, and MCA will notify, right? As I explained you earlier. And when IND AS will be applicable to the non-corporate entities, which is not clear as of now. As of now, IND AS are not applicable to non-corporate entity, right? So probably if I talk about 5-year, 10-year down the line, your answer is right. So 5 to 10 year down the line, there may be a situation where we will also notify, we will also issue this retirement benefit IAS. Any other question, friend? Any other question? How do other countries name Bunjuru? So other countries, for example, Singapore, for example, Malaysia. In Singapore, they are calling this IFRS as a SGFRS, Singapore Financial Reporting Standard. Malaysia call it as a MFRS, Malaysian Financial Reporting Standards, right? India calling it as a IND AS, Indian Accounting Standard. If I talk about Europe, they are calling it as a IFRS. If I talk about Pakistan, they are calling it as a IFRS. They have adopted IFRS. Prashant is asking, sir, can a trust still apply IND AS voluntarily? Seen a foundation that does it? So Prashant, trust cannot apply voluntarily. The foundation probably which you have seen it, probably it is a section 8 company. It is a section 8 company. Okay. Section 8 company can apply IND AS if it meets the threshold criteria. Abrakesh is saying, sir, why? Jitesh is saying, asking, sir, please mention one Carvin. Jitesh, that Carvin was related to the merger and acquisition accounting. So we have clarified, if a group entity is acquiring another group entity, then we will not apply fair value method. We will apply book value method. 103. Abrakesh is saying, sir, why division not applicable for CA final, as you have shared earlier? It is just for the in CA final curriculum. In financial reporting, have you seen your study material? So it's a big volume. I would say, you know, a lot of coverage is there. It is not a small subject, it is a big subject. So just to restrict the complexity level, because division 3 is applicable for NBFC companies, and this is a very limited applicability, right? NBFC companies are a very limited set of companies. So that is why in IND AS, that is why in CA final, only division 2 is covered. And division 2 is covered only little bit, right? It's not completely. So only introduction to division 2 to schedule 3 is covered. Just to restrict to your coverage. If you want that division 3 should be covered, I'll recommend it to ICAI. If everyone converged IFRS, then again the purpose of having a standardized accounting standard is defeated, right? You are absolutely right, Sujoy. But again, you need to think about at what level you are doing a convergence. At what level? For example, in India, we are very close to IFRS, as I explained the percentage, right? But let's say if you're doing the convergence and you are only complying with the 75 to 80%, it does not serve the purpose, right? You have to see the substance. You have to see the substance. If you are complying more than 95%, more than 97, 98%, it is great. But if you are complying only 75, 70, 80%, it is not right. So I've answered all the questions so far. I hope you are enjoying the session. I hope you are able to understand the session. If yes, can I move to the next part? Great. Thanks for the wonderful feedback, guys. Thank you so much. Bindu is again asking, sir, if a global company do not follow IFRS, for example, in US GAAP is followed. In that case, will our IND AS apply or should we know US GAAP, please guide? First of all, Bindu, let me clarify. IND AS is only applicable to India. It is only applicable to Indian company, right? So it doesn't matter what others are applying. You are right. In US GAAP is applicable. You are right. Okay. In US GAAP is applicable. But let's say you are the subsidiary of a US parent, right? So for all Indian purposes, you have to prepare under IND AS. You have to follow IND AS. Okay. But what about the US parent consolidation, right? That US parent will consolidate Indian subsidiary. So in that case, that Indian subsidiary has to convert its financials under US GAAP only for the purpose of US parent, not for the regulatory purpose. Right, Bindu? I hope I have answered your query. Yes, now let me take you on the IND AS roadmap in India. Applicability and roadmap for IND AS. Friends, as I told you, we have accounting standard live right now. We have IND AS live right now. Means we have two set of standard for corporate, for companies. And of course, I am talking about the companies. We have this set of standards, right? Now the question comes, sir, on which set of entities AS is applicable and on which set of entities IND AS is applicable? If I will be able to know on which set of entities IND AS is applicable, probably on others AS is applicable, because there are only two set of accounting standards. So friends, these IND AS were notified in 2015, right? On 16 February 2015. And on 16 February 2015, the roadmap and applicability of IND AS were notified. The roadmap for applicability of IND AS were notified on 16 February 2015, right? And there was another notification on 30th March 2016, which also prescribed the applicability of IND AS on NBFC companies, right? So there are two notifications, 16 February 2015 and 30th March 2016. These two notification, Ministry of Corporate Affairs notification, provides the guidance on the applicability of IND AS on the Indian companies, right? Let's move forward and understand the applicability in more detail. Friends, first of all, students, as I told you, these IND AS were notified. These IND AS were notified on 16 February 2015, right? And one of the applicability roadmap was also notified on 16 February 2015. I'm talking about way back. 16 February 2015 means 8 years ago. So friends, on 16 February 2015, right, the applicability of IND AS was notified for the companies, private limited companies, right? Other than NBFC companies, Okay. So this was according to MCA notification dated 16 February 2015. And friends, at that point of time, the entire applicability was divided into the two phases. Okay, phase 1, phase 2. In the phase 1, all those companies were covered where the companies were having a net worth of 500 crores or more. Be it a private limited company, be it a limited company, if the net worth was more than 500 crores on 31st March 2014, then IND AS was applicable from 16-17, the first phase. Or holding subsidiary JV or associate companies of these companies were also required to apply IND AS from 16-17. In phase 2, all listed companies were covered irrespective of the net worth. All unlisted companies were covered whose net worth is more than 250 crore, and holding subsidiary JV or associate of such companies. So these companies were classified under phase 2. On these company, IND AS were applicable from 17-18. Like applicability of IND AS was notified for NBFC companies, and it says that all NBFC companies whose net worth is 500 crores or more, IND AS was applicable from 18-19. And all listed NBFC unlisted with more than 250 crore was applicable from 19-20. On banks and insurance companies, there is no applicability of IND AS as of now. It is deferred till further notice. Friends, first of all, this initial applicability criteria was too old, right? Was too old. If I were to summarize, if I have to summarize that today IND AS is applicable on which set of entities today, this entire thing I'm talking about the past, that on these companies IND AS was applicable from 16-17, from 17-18, right? If I have to talk about today, right, on which set of entities IND AS is applicable, if I have to talk about 27 April 2024, right, that today IND AS is applicable on which set of entities. So let me talk about the today's applicability criteria. Is that fair? Is that fair? Is that fair? And if I talk about as on date applicability, IND AS is applicable to all listed companies except SME listed companies. IND AS is applicable to all listed companies except SME listed companies. Okay. Now, I would like to, I would request each one of you that please come up with your pen and paper and please started write down. Please started noting it down. Okay. Number one, sir, from the listed company perspective, right? As you said, IND AS is applicable to all listed companies. So whether it is only equity listed companies or a debt listed company also. So friends, if a company's equity is listed in any stock exchange in India or outside India, so first of all, I am only talking about Indian company. For example, there is an Indian company which is not listed in India, which is listed in London Stock Exchange, which is listed in NASDAQ, US Stock Exchange. Sir, whether it will be called as a listed company in India? Answer is yes. It is not listed in India. It is listed outside India, right? But yes, it is called as a listed company in India, right? So first of all, please write down. IND AS is applicable to all listed companies. All listed companies, right? Listed company includes equity listed as well as debt listed. Listed company includes whether listed in India or listed outside India, right? So all these companies are covered under listed companies, and if it is listed, IND AS is applicable. Sir, is there any exception? Sir, is there any exception? Is there any exception to this listed company rule? Answer is yes. There is a concept of, SME. There is a concept of SME company. There is a concept of SME companies, a small and medium enterprises company, right? And Government of India has a stock exchange for SME companies separately. Government of India has a stock exchange for SME companies. So if a company is listed on a SME stock exchange, if a company is listed on a SME stock exchange, then IND AS application is not mandatory, it is voluntary. Is that clear? So IND AS are applicable to all listed companies except SME listed entities, right? Please write down the name of one of the SME stock exchanges, NSE Emerge. NSE Emerge. Okay. Here. Understood, sir. Understood. This part I am talking about 16 February 2015. 16 February 2015. Okay. 16 February 2015. This is as per the notification dated 16 February 2015. So as of now, IND AS is applicable to all listed companies except SME listed entities. Listed includes equity listed as well as debt listed. Listed includes listed in India or outside India. For example, Renew Power Limited is a company. It is not listed in India. It is listed in NASDAQ, USA. So for Indian purposes, it is applying IND AS. Right? Sir, we understood listed. Now what about unlisted? So unlisted companies whose net worth is more than 250 crore, equal to or more than 250 crore. Any company which is not listed, company means private limited or limited. Any company which is not listed, they have to apply IND AS if their net worth is more than or equal to 250 crores. If their net worth is more than or equal to 250 crores. On those entities, IND AS is also applicable. So one thing is clear. If an entity is listed, you are not required to see the net worth criteria. But if an entity is unlisted, you have to see the net worth criteria. Right? You have to see the net worth criteria. Sir, what is the meaning of net worth? So we have to see the definition which is given under Companies Act. I'll discuss. Okay, sir, we understood that as per 16 February 15 notification, if I talk about today, IND AS is applicable to all listed entities except SME companies. IND AS is applicable to all unlisted companies whose net worth is equal to or more than 250 crores. Sir, for example, there is a company called Reliance, right? So this is a Reliance company called Reliance. And Reliance Industries is a big company, listed company, and all know that Reliance IND AS is applicable, right? IND AS is applicable. When you see the related party schedule of Reliance, it is a big schedule of 18-20 pages. Let's say, sir, Reliance has a subsidiary. Reliance has a joint venture. Reliance has an associate. Reliance has a subsidiary, Reliance has a joint venture, and Reliance has an associate, right? Sir, in this case, Reliance needs to consolidate also. This subsidiary will be consolidated in Reliance. JV will be consolidated into Reliance, and this associate needs to be consolidated into Reliance, right? So earlier what happened, Reliance was also preparing under accounting standard, and all these companies were also preparing under accounting standard. Life was very simple. Sir, if in this case on Reliance IND AS is applicable, so should it be applicable to this subsidiary, JV or associate also? For example, these subsidiary, JV and associate are neither listed nor their net worth is more than 250 crore. So notification says that if IND AS is applicable on any company, for example, IND AS becomes applicable on Reliance, it will be automatically applicable to the subsidiary, JV and associate of such company. It will be automatically applicable to subsidiary, associate and JV of such company on which IND AS is applicable. And it also says that it is also applicable to the holding of such company. Means, for example, IND AS is applicable on Reliance. It will be applicable on the parent of Reliance. It will be applicable on the subsidiary, joint venture and associate of Reliance. Is that clear? Is that clear? Sir, what about preference share listing? If a company has got preference share listed, you remember I told you debt or equity, both. So even if the preference share has also listed, then IND AS will be applicable. Friends, you all have heard about subsidiary, joint venture, associate. You remember in CA Inter, you have read accounting standard 21, 23, 27. You must have went through all these standard, IND AS 21, 23, 27. Yeah. So friends, if IND AS is applicable on any company, it will be automatically applicable to the holding of that company. It will be automatically applicable to the subsidiary, associate and JV of such company, right? Sir, what about NBFC companies? So this is only applicable to companies other than NBFC companies. Sir, what about NBFC companies? Again, IND AS is applicable to all listed NBFC companies, and it is also applicable to all unlisted NBFC companies whose net worth is more than 250 crores. Whose net worth is more than 250 crores, right? Net worth is more than 250 crores. Okay. And IND AS, once IND AS is applicable on such company, it will be applicable. It will be applicable to the holding, subsidiary, associate, and JV of such company. Right? Okay. So this is what this notification says. Sir, if I talk about this notification, sir, on which entities IND AS is not applicable? On which entities IND AS is not applicable? Just to summarize, IND AS is not applicable to the non-corporate entities. IND AS is not applicable to the SME listed companies. Non-corporate entity means holding, uh, uh, proprietorship company, partnership company, Hindu undivided family, your trust, LLP. So proprietorship, partnership, HUF, trust, LLP. So these are called as a non-corporate entity. On those non-corporate entities, you cannot apply IND AS even voluntarily. On SME listed companies, you are not applied even voluntarily. Sorry, you can apply voluntarily. So voluntary mode is there on the SME listed companies. On insurance and banking companies, as State Bank of India, HDFC Bank Limited, ICICI Bank Limited, IND AS is not applicable. They cannot apply even voluntarily. companies whose net worth is less than 250 crore. So the companies whose net worth is less than 250 crore, they are not required to apply IND AS mandatorily, but they can apply voluntarily. सो अगर कंपनी की नेटवर्थ 250 करोड़ से कम है तो वो वॉलंटरी अप्लाई कर सकते हैं, मैंडेटरी एप्लीकेशन नहीं होगी. मैंडेटरी एप्लीकेशन विल नॉट बी देयर बट वॉलंटरी एप्लीकेशन विल बी, राइट. ओवरसीज एंटिटीज, फॉर एग्जांपल, there is a company which is incorporated in USA. On that US entity, IND AS is not applicable. So IND AS is only applicable for IND AS, for Indian entities, right? The last part I will be discussing later on. So friends, so far, do you have any question so far? Do you have any question? Do you have any question so far? Please let me know if you have any question. Any question? No? Yes. So Abrakesh is asking, sir, if once applied, then can it be withdrawn? I'll be coming to that. I'll be coming to that. Okay. So let me take you on an Excel file first. Please confirm if my Excel file is visible. Right. And one more thing I need to add. If there is a NBFC company whose net worth is less than 250 crore, it cannot apply even voluntarily. I hope Excel file is visible. So non-corporate entity cannot apply even voluntarily. Insurance and banking companies cannot apply even voluntarily. Overseas entities cannot apply even voluntarily. NBFC companies whose net worth is less than 250 crores cannot apply even voluntarily. SME listed companies can apply voluntarily. Mandatory applicability is not there, but can apply voluntarily. Companies whose net worth is less than 250 crores can apply voluntarily. Right? This is what we have discussed. To summarize, we have discussed that IND AS is applicable to all listed companies except SME listed companies. IND AS is applicable to all unlisted companies whose net worth is more than 250 crores. Same way, IND AS is applicable to all listed NBFC companies and unlisted NBFC companies whose net worth is 250 crores. Once IND AS is applicable on any company, it will be automatically applicable to the holding of such company and subsidiary, associate, and joint venture of such company, right? IND AS is not applicable to non-corporate entity. IND AS is not applicable to insurance and banking company. IND AS is not applicable to foreign company. IND AS can be applied voluntarily to SME listed companies, can be applied voluntarily to companies whose net worth is less than 250 crore. IND AS is not applicable to NBFC companies whose net worth is less than 250 crores, right? This is what the guidance talks about. Now, friends, we will be discussing one of the case study to take it further. Right. Friends, I have group entities. I have a company called Reliance Industries Limited, and I have given a structure of Reliance Industries Limited. And RIL World Private Limited. First of all, RIL, Reliance Industries Limited, is a listed company. And here it is standalone, here it is a Reliance consolidated financial statement. Tell me whether on Reliance Industries Limited, IND AS is applicable or IND AS is not applicable. It's a big company, listed company. Friends, please tell me whether IND AS is applicable to Reliance or it is not applicable to Reliance. It is applicable to Reliance. Very good. IND AS applicable. IND AS applicable. Right? IND AS is also applicable to Reliance CFS. Yeah. It is also applicable to CFS. CFS means consolidated financial statement. Now, friends, we understood that if IND AS is applicable to a company, it is automatically applicable to the subsidiary company, JV company, and associate company, right? So, friends, Reliance India Private Limited is a parent of Reliance. Please tell me whether IND AS will be applicable or IND AS will not be applicable to this Reliance India Private Limited. Reliance India Private Limited is a parent of Reliance Industries Limited. And this is an unlisted entity. Assuming the net worth is also less than 250 crores. You need to tell me whether IND AS will be applicable or not applicable to Reliance India Private Limited. The relation it is a parent of Reliance. Tell me, guys, what is your view? So Joy is saying that it is applicable because it is a holding company of Reliance. And if IND AS is applicable on a company, it is automatically applicable to its holding company also. Very good. So yes, applicable. I don't know what is it. Applicable being parent of Reliance. Applicable being holding company of Reliance, right? Applicable being holding company of Reliance. Just allow me a minute. I am resharing my Excel file. Yes. I think there is some problem. Just give me a minute. Friends, allow me 2 minutes. I'm just stopping my screen share and then I'm again opening my Excel file. I'm resharing my screen. Please confirm if it is visible. Yes. I hope the screen is visible now. Yes. On Reliance India Private Limited. So you are right. The IND AS is applicable. Why? Because it is a parent of Reliance, right? And RIL World Private Limited. RIL World Private Limited. This is an investor of Reliance. Means Reliance Industries Limited is an associate of Reliance World Private Limited. Reliance Industries Limited is an associate of Reliance World Private Limited. Before discussing this, let me discuss some relationships. Okay. And you heard about subsidiary. You heard about JV, joint venture. You all are CA final students. You must be heard about these concepts. Associate. You heard about this concept, subsidiary, joint venture, and associate. So, friends, let's say if someone will tell you, or you will say that I am son of him. I am son of him. Then who is he? Then what he will say? What he will say? He will say, I am father of him. Am I right? If someone will say, I am son of him, then he will say, I am parent of him. Right? If someone will say, I am nephew of him, then what other person will say? अगर कोई कहेगा मैं उनका भतीजा हूं तो वो क्या कहेंगे? What other person will say? I am uncle of him. I am uncle of him. Right? All agree? Relationship सबको पता है? Relationship सबको पता है ना? If someone will say I am son, the other one will father, parent. If someone will say I am nephew, the other one is uncle. Likewise, someone say I am a subsidiary. The other one will say, I am the parent. The other one will say, I am the parent. Someone will say, I am a joint venture of him. The other one will say, I am the venturer for him. I am the venturer. These are the legal words, the accounting standard words, not in IND AS, rather in AS also. If someone will say, I am associate, the other one will say, I am investor. The other one will say, I am investor. Okay. I am investor. Right, friends? Okay. In accounting standard, on subsidiary AS 21 was there, on associate AS 23 was there, on joint venture AS 27 was there. Are you clear about this relation? Are you clear about this relation? Subsidiary parent, joint venture venturer, associate investor. Friends, if there is a company is a subsidiary, like Reliance Industries Limited was a subsidiary. Reliance Industries Limited was a subsidiary of Reliance India Private Limited, right? If RIL is a subsidiary, RIL India Private Limited is a parent. If IND AS is applicable to a subsidiary, it will be applicable to a parent. But for example, friend, if IND AS is applicable to this entity which is a joint venture, for example, IND AS is applicable, IND AS, I'm writing this here, IND AS. It is applicable to the subsidiary. It is applicable to the subsidiary. Applicable. Whether it is applicable to the parent also. If IND AS is applicable to the subsidiary, whether it will be applicable to the parent also, answer is yes. Because the notification says that if IND AS is applicable to a company, it will be applicable to the holding of such company also. And subsidiary, JV and associate of such company. So yes, it will be applicable to the parent also. If IND AS is applicable to a joint venture, whether it will be applicable to the venturer. Now I'm asking you guys, and from here, there will be a brainstorming of your brain. आपको क्वेश्चन समझ में आया? मैंने पूछा कि अगर कोई कंपनी सब्सिडरी है तो क्या उसके पेरेंट पे इंड एस अप्लाई होगा अगर सब्सिडरी पे अप्लाइड है तो? यू सेड यस एंड आई अग्रीड. Another question is, I have asked if there is a joint venturer, sorry joint venture, और joint venture पे इंड एस अप्लाई होता है तो क्या वेंचरर पे अप्लाई होगा? First of all, I told you the relationships, and now I'm asking this question. Nisha is saying yes. Nisha, like a chartered accountant, apply your mind, please. What is written here? If this is a company, right? This is a company on which IND AS is applicable. So on the upside, what is covered? On the upside, only holding is covered. Holding means parent. On the upside, whether investor or venturer is covered. On the downside, are you able to understand? I am saying that IND AS is applicable to a company, right? And this company is a subsidiary of this company, right? Means this company is a parent of this company. So my question is, if IND AS is applicable to a subsidiary, this is a subsidiary, whether it is automatically applicable to a parent? Your answer was yes. Why? Because, sir, in the notification, the word used is holding. The word used is holding. But my question is, if this company is a joint venture and IND AS is applicable on this company, whether it is applicable to the venturer, whether venturer word is covered in the notification, answer is no. Answer is no. Yeah. So friend, if IND AS is applicable to the joint venture, it is not automatically applicable to the venturer, right? It is not applicable to the venturer, not applicable. Why? Because the word uses only holding. If IND AS is applicable to an associate, whether it will be applicable to the investor, not applicable. Now let me flip this question. Now let me flip this question. For example, IND AS is applicable to the parent. Whether it will be applicable to the subsidiary, answer is yes. If a company, if IND AS is applicable on its company, on a company, it is applicable to the subsidiary also on the downside. Now I need to check whether you have understood or you have not understood. If IND AS is applicable to a venturer, whether it is applicable to the joint venture. If IND AS is applicable to the venture, whether it is applicable to the joint venture. This is a company, this is a venturer company. Whether it is applicable to the joint venture, this is the joint venture. Jay is saying yes, you are right. Because on the lower side, on the downside, subsidiary, associate and joint venture, नीचे वाली सारी entity covered है, but ऊपर वाली सिर्फ holding covered है. Right? Yes, it is applicable. If IND AS is applicable to an investor, this is an investor, IND AS applicable. Whether it is applicable to its associate. Yeah, whether it is applicable to associate. Students, I'm not getting the answer. Are you not able to understand? Students, are you not able to understand? Are you able to understand or are you not able to understand, guys? You are right, Bindu. You are right, Priyanshi, Radhika, great. Yes, it is applicable to associate. Yes. So I believe now you guys have understood. I believe now you guys have understood that what is the meaning of this. IND AS is applicable to the holding, subsidiary, and joint venture, right? Associate and joint venture. I hope now you guys have understood. Now I'll come to my question. So friends, IND AS is applicable on Reliance. Whether it is applicable to its investor, who is Reliance World Private Limited, assuming its net worth is also less than 250 crores. Bindu, if IND AS is applicable to investor, it is applicable to associate, you are right. But if IND AS is applicable to associate, it is not applicable to investor. Because on the upper side, only holding is covered. Right? So in this case, Priyanshi, you are right. IND AS is not applicable to Reliance World Private Limited. Not applicable, being an investor of RIL. Right? And now, so just RIL Entertainment Private Limited. Sorry, this one. RIL Info Private Limited. RIL Info Private Limited. Okay. RIL Info Private Limited is a subsidiary of Reliance. And the net worth is less than 250 crore. Please tell me whether on this entity IND AS is applicable or IND AS is not applicable. RIL Info Private Limited is a subsidiary of Reliance. Whether IND AS is applicable on this entity, although net worth is less than 250 crore. Yes, IND AS applicable. IND AS applicable. Why applicable? Being subsidiary of Reliance. On subsidiary, IND AS is applicable. RIL Bank Limited. RIL Bank Limited. RIL Bank Limited is also a subsidiary of Reliance. Tell me whether IND AS is applicable or IND AS is not applicable. You're right, Bindu. Bindu is saying Reliance Info Private Limited, IND AS applicable since parent subsidiary relationship. What about RIL Bank Limited? Since you remember, for bank and insurance, there is some exception. You are right, Abrakesh. You are right, Bojanaru. You are right, Sujay. Yes. So, Chandrasekhar has very well explained, sir, on banks, since it is not yet notified, so IND AS is not applicable. But for CFS purpose, bank will prepare IND AS financially, right? On RIL bank, not applicable. Not applicable, being a bank, right? So friends, banks cannot apply IND AS even voluntarily. So bank's financial statement will be reported as per accounting standard, as per ICAI, right? And but how come Reliance will prepare its consolidated financial statement? अगर अगर बैंक अकाउंटिंग स्टैंडर्ड में देगा रिलायंस को, तो रिलायंस कैसे बनाएगी अपने कंसोल? So for CFS purpose, only for CFS purpose, bank will prepare IND AS financial, not for the regulatory reporting. IND AS financial. If you have any question, please ask this question. This is important aspect, right? On the bank, IND AS is not applicable. Reliance Insurance Limited is an associate of Reliance. Tell me, IND AS applicable or not applicable? Subsidiary, joint venture, associate, IND AS applicable. But here, this is an insurance company and hence it is not applicable. Not applicable being a insurance company, right? But yes, for CFS purpose, this insurance company will prepare IND AS financial. For CFS purpose, insurance company will prepare IND AS financial. Is that right? Is that right? Any question so far? Any question so far, friends? RIL India SME Limited. This is a company which is listed on SME stock exchange. And it is a subsidiary of Reliance. Subsidiary. IND AS applicable. Not applicable being a SME, but they can apply voluntarily, right? They can apply voluntarily. Not applicable being a SME entity. But for again, CFS purpose, this SME entity will prepare, this SME company will prepare IND AS financial. Any question here? Any question so far? Any question so far? It's one question. Are you able to understand the concept or not? क्या आपको बात समझ में आ रही है? I need the answer yes, no, or not applicable. I can see except for 5 students, others are not replying. Others are not responding. I can see the response from Shreyans. I can see response from Priyansi, Radhika, Bindu, Abrakesh, Sujay, Chandrasekhar, but not others. Okay. Reliance NBFC Limited. Net worth is more than 250 crore. It is a subsidiary of Reliance. It is a subsidiary of Reliance. IND AS applicable, not applicable? Even on a standalone basis, IND AS is applicable because its net worth is more than 250 crores, right? Yes, applicable. Applicable. I am just parking this question, this particular entity, and I'll cover it at the end. Reliance XYG Private Limited. Reliance XYG Private Limited, net worth is less than 250 crore and it is an associate of Reliance. It is not a bank, not an insurance company, not a SME listed entity. It is not a non-corporate entity. Simple. It is a simple entity, normal entity, but the net worth is less than 250 crore. But yes, it is an associate of Reliance. IND AS applicable or not applicable? Yes, applicable. Applicable. Why? Applicable being an associate of RIL. Applicable being an associate of RIL. Right? RIL ABC Private Limited net worth is again less than 250 crore, but it is a joint venture of RIL. Again applicable. Applicable being a JV of being a joint venture of RIL. RIL LLP Limited, not limited, RIL LLP. It's a non-corporate entity. RIL LLP is a non-corporate entity. Non-corporate. IND AS applicable or not applicable? Not applicable. Why? Being a non-corporate entity. Non-corporate. Right. But yes, this LLP will prepare for CFS purpose. CFS purpose. LLP will prepare IND AS financials. Is that right? Is that okay? RIL Africa Limited. This entity is in Africa, overseas entity. And this is a subsidiary of Reliance. Whether IND AS applicable? Not applicable. Why overseas entity? Not applicable. Being an overseas entity. But how come RIL will consolidate since it is a subsidiary? This overseas entity is a subsidiary. So for consolidation purpose, for CFS purpose, this overseas entity will prepare IND AS financial. For CFS purpose, overseas company will prepare IND AS financial. Friends, do you found this case study useful? Do you found this case study useful? Yeah, everything is covered here. So one of the aspects I have not covered so far. Friends, RIL NBFC Private Limited net worth less than 250 crore. Okay. And this is a subsidiary of RIL. Since you remember when I have told you applicability, I have told you if NBFC company having a net worth less than 250 crore, then it cannot apply IND AS even voluntarily, right? The criteria is little stringent. NBFC companies. Right? And friends, March 2016 notification says that, this 30th March 2016 notification is for NBFC companies. It says that the 30th March 2016 notification says that NBFC company is a subsidiary, joint venture, associate, or holding of a non-NBFC company. Reliance is NBFC or non-NBFC? Reliance is non-NBFC. And this company is a NBFC company. So the MCA notification says that if a NBFC company is a subsidiary, joint venture, associate, or holding of a non-NBFC company, then IND AS will not be applicable to such NBFC just because of relationship with the non-NBFC. So friends, going by the independent criteria, अगर मैं independently देखूं तो क्या इस entity पे IND AS apply होगा? Answer is no. Why? Neither it is a listed company nor the net worth of this company is more than 250 crores. So going by the independent criteria, IND AS is not applicable. Now going by the relationship criteria, So this is a NBFC company, but this company has a relationship with the non-NBFC company. This company, NBFC, is a subsidiary of non-NBFC, and hence IND AS is not applicable, right? Not applicable. Being a NBFC, subsidiary of non-NBFC, non-NBFC. Is that clear? Is that clear? But for CFS purpose, of course, this company needs to prepare. This company will prepare IND AS financial. Any question? Any question on this? I will share this Excel file also. Now, let's come to the net worth. What is the meaning of net worth? The net worth is defined under Section 2, subsection 57 of Companies Act 2013. What this Section 2, subsection 57 of Companies Act 2013 says that? It says that net worth means paid up share capital. Net worth means paid up share capital. Paid up share capital plus securities premium plus reserves created out of profit plus reserves created out of profit minus miscellaneous expenditure to the extent not written off, right? So friends, let's understand the net worth. Net worth definition is paid up share capital plus securities premium plus reserves created out of profit, right? Plus miscellaneous expenditure to the extent not written off. I am sharing the institute study material, and there we will discuss one of the question on net worth. Please let me know if the study material is visible. Following is a snapshot. Of just give me a minute. Following is a snapshot of audited balance sheet of Company A as on 31st March 2014. Company A's equity shares are listed on Bombay Stock Exchange. So friends, if I talk about today's scenario, if it is a listed company, you are not required to see the net worth. But just for the sake of calculation, let's discuss this, okay? Because this is talking about the 2014, right? Equity share capital 160 crores, security premium 200 crore, general is a 150 crore, revaluation is a 40 crore, profit and loss account balance 75 crores, then liability is given, then fixed asset, investment, current asset, and miscellaneous expenditure to the extent not written off is also given, right? Just give me a minute. Yeah. So friends, what is the first one? Paid up share capital. If I need to calculate net worth, paid up share capital. So this will be covered. Paid up share capital will be covered. Second one was, first of all, it is paid up share capital. The second one was securities premium. It will be covered. Third one was reserves created out of profit. So this general reserve is also created out of profit, and this P&L is also created out of profit. Revaluation reserve is not created out of profit. Revaluation reserve is not created out of profit, right? So this general reserve will be covered and profit and loss account will be covered. And the last one is miscellaneous expenditure to the extent not written off. This 80 will be deducted. This is the formula of net worth as per section 2 subsection 57 of the Companies Act. The revaluation reserve would not be included in the calculation of net worth as per the definition of section 2 subsection 57. I hope it is clear to all of you. I hope it is clear to all of you, friends. So Jay, you are right. Net worth is 505 crores. Yes. Yes. Again, I am coming back to my Excel file. Sir, if a company is preparing a standalone and consolidated both, sir, whether net worth has to be checked on a standalone financial or consolidated financial. Let's say today we are into accounting standard, but I need to check whether IND AS is applicable or not applicable. So do I need to see standalone or do I need to say console financials? So net worth is always need to be checked on a standalone financial, right? Always on the year-end audited standalone financials. Sir, whether net worth has to be seen on the basis of interim financial statement or year-end financial statement. Net worth is always required to be seen on the basis of year-end audited standalone financial statement. Year-end audited standalone financial statement, right? Now, need to see from which date IND AS will be applicable. This is a company ABC Private Limited, and this amount is in crores. This amount is in crores, right? In 1920, the net worth was 190 crore. Whether IND AS will be applicable in the next year, answer is in 2021 it is 210 crore. IND AS not applicable. In 21-22, the net worth become 270 crores. Tell me, IND AS is applicable from which year? On 31st March 22, when the accounts were prepared under IGAP, the net worth become 270 crores. Tell me, IND AS is applicable from which year? IND AS will be applicable immediately from next year, FY 22-23. IND AS is applicable from FY 22-23. Now, in the next year, when you implemented IND AS, your 31st March 23 balance sheet is on IND AS, the net worth become 180 crore. The net worth become 180 crore. The net worth eroded due to losses. Can I go back to accounting standard? One of the student was asking, sir, whether IND AS once applicable, can it be applicable forever? Or I can again go back to accounting standard? So answer is no. IND AS once applicable, you cannot go back to accounting standard. This is an irrevocable option. This is an irrevocable option. You cannot go back to accounting standard, right? IND AS once applicable, it will be applicable forever. Sir, if a company has applied IND AS voluntarily, if a company has applied IND AS voluntarily, then it has to apply IND AS forever. Right? There is no go back clause. There is no moving back twice. Right? Okay, friends. I am going back to my presentation now, and we discuss this aspect quickly. I'll discuss the points related to applicability. Quickly, I'll discuss. Insurance and banking companies are not allowed to apply IND AS even voluntarily. Companies that are listed or in the process of listing in SME exchanges are also not to apply IND AS mandatorily, but can apply on a voluntary basis. SME company. Companies not covered in roadmap as per net worth means whose net worth is less than 250 crores, or from any other criteria they're exempted, right? So on those companies, IND AS are not applicable, or IND AS are not applicable to non-corporate entities. Net worth has to be calculated as per section 2 subsection 57 of the Companies Act 2013 and calculated on the basis of year-end audited standalone financials. IND AS will apply to both consolidated as well as standalone financials. IND AS once adopted, either voluntarily or mandatorily, cannot be revoked in the prospective years. Indian company which is a subsidiary, associate and JV of a foreign company. For example, ABC Private Limited is an Indian company. ABC Private Limited. It's a small company. Net worth is only 50 crores. But it is a subsidiary of a US based company. ABC USA. US based company. And that US company is a listed company in US. And that US company is a listed company net worth of 1,000 crores. So, friends, first of all, on overseas entities, IND AS is not applicable. And just being a subsidiary of that overseas entity, IND AS is also not applicable to this Indian entity, right? तो आपको इंडियन कंपनी पे IND AS का एप्लीकेबिलिटी देखने के लिए इंडियन कंपनी का ही क्राइटेरिया देखना पड़ेगा. You have to see the threshold which is net worth or listing for Indian companies for looking at Indian companies applicability of IND AS, right? So any Indian company which is either subsidiary, joint venture, associate, or holding of a foreign company, so IND AS is not applicable according to the relationship from that foreign company perspective, right? Likewise, for overseas entities, IND AS is not applicable. The only thing is these entities need to prepare their financial statement as per their local GAAP, but for the Indian consolidation, they have to prepare under IND AS. Net worth we discussed, this example formula we have discussed. Now we have quick question, right? And then we will conclude the session. Yes, ABC India Private Limited is having a net worth of rupees 100 crores. Friends, the net worth is 100 crore only. The net worth is 100 crore. And it's a private limited entity. IND AS applicable, not applicable? Tell me quickly. Not applicable. It is a subsidiary of ABC USA LLC, but it is a subsidiary of a US company. And US company net worth is 1,000 crore. Advise the IND AS applicability on both these companies. Tell me, friends, whether IND AS is applicable or not applicable in this case. Not applicable at all. Because this Indian company has a net worth of less than 250 crore. And this Indian company is a subsidiary of a foreign company. So we will not see the criteria of that foreign company, right? And on foreign company, of course, IND AS is not applicable. Sujay is asking if IND AS is applicable on an entity and subsequently it get listed on SME exchange. Will IND AS be applicable? Yes. Sujay, IND AS is applicable. Abhrakesh is saying if non-corporate entity is JV of IND AS compliant corporate, then IND AS applicable. So Sujay, on non-corporate entities, IND AS is not applicable. But yes, if it become a JV, for the consolidation purposes, this non-corporate entity is required to prepare the financial statement under IND AS only for the purpose of consolidation. Guys, what is your answer for 1? I think you guys have understood the answer for 1. Yeah. Yes. On this company, IND AS is not applicable. And even on this company, IND AS is not applicable, right? Okay. Yes. The second one. ABC India Private Limited is having a net worth of 300 crores. So it's an unlisted entity, but net worth is 300 crores. IND AS applicable? Yes, IND AS applicable because net worth is 300 crores. Yes, it is applicable. And it is having subsidiaries in Bangladesh and Vietnam. They have a foreign subsidiaries. These are small companies, doesn't matter even if these are large companies. Advise the IND AS applicability on both these companies. On Indian company, IND AS is applicable. Whether IND AS is applicable on Bangladesh and Vietnam entity also. Yeah. You are right, Priyanshi. On Indian company, IND AS is applicable. But on Bangladesh and Vietnam entity, IND AS is not applicable. They have to follow their own GAAP. But for the consolidation purposes, Indian consolidation, they have to prepare IND AS accounts only for the consolidation. Question number 3. ABC India is a listed company in India. IND AS applicable or not applicable? Of course applicable. It's a listed company in India. IND AS is applicable, right? IND AS is applicable. So it has a subsidiary XYG India Limited listed on a SME stock exchange. So whether this SME listed entity IND AS is applicable, not mandatorily, but voluntarily it can be applied. It has also an associate which is a bank. On bank IND AS is not applicable. So both these companies will prepare IND AS accounts for the purpose of this ABC consolidation, but for their own regulatory reporting, they have to follow accounting standards. Question number 4. ABC Limited is having an investment in LLP, which is a non-corporate, and ABC Limited is applying IND AS. So what is the applicable gap on LLP? LLP will prepare its accounts as per accounting standard. But for the purpose of consolidation of ABC Limited, ABC will convert its accounts under IND AS only for the purpose of consolidation. Question number 5. Important question, and here I need to see your attention. A Limited, a listed company. So A Limited is a listed company. IND AS applicable or not applicable? IND AS is applicable. This listed company is an associate. So listed company is an associate, like Reliance was an associate of ABC Private Limited. So ABC Private Limited is an investor. Net worth of ABC Private Limited is less than 250 crore. So this is a listed company, IND AS is applicable. If I talk about this ABC Private Limited, it is an unlisted entity. Net worth is also less than 250 crore. IND AS is not applicable as per its own criteria. But you need to tell me, advise the IND AS applicability on A and ABC. On A, it is very clear. It's a listed company. What about ABC? Whether on ABC Private Limited IND AS is applicable? Yeah. On ABC not applicable. Why? Because ABC is an investor. ABC is not a holding company. It is an investor, right? It is an investor. Very good. Great. I love to see the right response from many participants. Question number 6. ABC India is a listed company in India, right? So it's a normal company, non-NBFC. It has a subsidiary which is unlisted. It has a subsidiary which is unlisted NBFC. Subsidiary is unlisted NBFC. Net worth is also less than 250 crore. And this company, ABC India, is a listed company. Net worth is not required to be seen. Listed company, IND AS applicable. As per its own criteria on this unlisted company, IND AS is not applicable because it's an NBFC. Discuss the applicability of IND AS. So friends, of course, on this listed company, IND AS is applicable. On this unlisted NBFC, as per its own criteria, IND AS is not applicable. And even it is a subsidiary of this non-NBFC, IND AS will not be applicable. You remember one of the clause I have told you. So in this case, on parent, IND AS is applicable. On NBFC subsidiary, IND AS is not applicable, but this company will prepare consolidated, company will prepare IND AS accounts only for the purpose of consolidation by the parent. Right? So this is thank you slide. I have completed my session with respect to introduction to IND AS and roadmap and applicability of IND AS. The last part is, introduction of Schedule 3. So I will be covering this introduction on Schedule 3 in the next class, right? In half an hour or 45 minutes. Okay. So the next class is mine only. So I have to talk about IND AS 1, presentation of financial statement, and I'll talk about Schedule 3 also there, right? So now I'm moving to the questions before I'm handing the mic to Shilpa ji. So let me see the query box and let me answer your question.
Thank you, sir.
Please
Thank you, sir.
post your question as well.
Uh,
So,
yes, sir.
Chandrasekhar is asking, sir, what if a listed company invested in a small company for a year or two and withdraw its investment subsequently, then whether a small company till its lifetime supposed to follow IND AS? Answer is yes. Answer is yes, right? So once IND AS is applicable on a company, it will be applicable forever. Then Chandrasekhar is again asking, sir, do subsidiary associate companies prepare IND AS compliant financial statement and share with the parent or investor or venturer themselves, share with the parent or investor or venturer, or parent or investor or associate investor or venturer themselves prepare CFS IND AS compliant for their group companies? As I remember, CFS prepared by parent company only. Chandrasekhar has a very valid question, and this question is more about operational and administrative aspect. So Chandrasekhar, in many cases, the companies prepare them itself, right? In many cases, for example, there is a small company, and on that, like non-corporate entity, right? And non-corporate entity accountant and auditors are not having any expertise on IND AS, and I am the parent of that entity, and I am following IND AS, so I have the expertise. So probably I will be migrating their financial statement into IND AS because this is my requirement. This is not a regulatory requirement of them. This is my requirement. So it's a both phase. In many cases, the company themselves prepare. In many cases, the parent or investor or venturer will prepare, right? So it is not written in any standard, but both the practice are there in the companies. Then Chandrasekhar is again asking the same question. I have already responded. Yeah. Yes. Sir, whether on government company IND AS is applicable, friends, there is no question of government company, electricity company, power company, etc., etc. Friends, there is a concept of listed company or unlisted company, right? There is a concept of company or a non-corporate company. So if there is a company, IND AS is applicable provided either it is listed or it is having a net worth of more than 250 crores, right? Yes. So thank you for the feedback, and I am glad to have these kind of feedback. Thank you so much, friends. And with this, I am handing over the mic to Shilpa ji for addressing few queries or giving some clarification. Thank you, students. Have a nice day.
Thank you, sir. Thank you. Okay, students, before just concluding the session, let us first move to some of the queries which I received. Sir, may I request you to stop sharing your PPT? Okay, so by the time sir is stop sharing this PPT, let us move on to the queries which I received and I was not able to answer at that time. First of the query was, ma'am, could you please repeat the MCQ link again? Since I'm not able to right now share this screen, but let me tell you, on BOS Knowledge Portal, if you just, when you come to the Knowledge Portal page, you'll find login, student login. When you log into that by giving your information, your registration number, at which level you want to register, you have registered, and what is your date of birth, you'll come to a page where there's a tab MCQ assessment. There's a tab which is stating as the tab will say MCQ paper practice. That new icon will be flashing to that particular tab. You can click there and there you will find all the MCQs chapter wise for each paper. For whatever paper you want to attempt that MCQ paper, you can link it there. Otherwise, I'm just sharing this boslive.ici.org. This is the BOS Knowledge Portal homepage. From there, you can go through this. Another query which I received was, since we are going to run for this November 2024 examination, we are going to run hybrid classes. That is, some classes will be live and some classes will be recorded. So students were asking how we'll proceed further in case they are having some doubts. So this was the query which was raised by Bujnuru Chandrasekhar. So let me tell you, Bujnuru, basically it is like whatever we have already uploaded the schedule. whatever classes we are going to post it recorded from the previous batch will be giving you one particular session where will be that schedule already mentions that this live session is for query resolving of these particular topics. For example, right now first 3 classes are live, which is already given in the schedule. When we'll be hosting the schedule for the month of May, for upcoming after completion of IND AS 1, will be uploading the recorded sessions of IND AS 7, IND AS 8, IND AS 10, and IND AS 34. You are supposed to go through these lectures, and then after 2 lectures we'll come out with one live session which will where the faculty Alok sir will be there and he'll be resolving your queries related to IND AS 7, IND AS 8, IND AS 10, and IND AS 34. So for resolving of queries, you should have your queries, and for queries it is all that you have to go through these recorded lectures, and after that whatever queries you have, you please note it down. Sir will address those queries in the live session. By the time, in case you are having any issues in understanding any particular concept, that also you can ask sir to do, and sir will re-explain that. Okay. So this is one way of how we'll be proceeding with hybrid mode of lectures for November 24 examination. One student was asking about section-wise weightage and the changes in the study material for the new scheme. So students, let me tell you, under new scheme, we are, okay, sir have stopped sharing the screen. So let me go through my panel. Just a minute, students. I'll go through this, my live lecture. Okay. So I'm sharing my screen, students. Hope you can see it. I have opened Institute's website. We'll go to students here. From students, we'll go to BOS Knowledge Portal. From Knowledge Portal, when we go directly to this BOS Knowledge Portal. Okay. Since I have already logged in, so I have opened this particular page. Here you'll get MCQ paper practice. This MCQ paper practice, when we click this particular tab, we'll find all the papers of final, since I have registered to final level. So all the papers of final are appearing here along with the number of questions which are there. Okay. We can start new practice. We can results of MCQ practice sessions, results of case scenario practice questions. Everything is mentioned here. You can start attempting any of the sessions, any of the paper by clicking here. Okay. Now, if I come back to my queries, one student asked about section-wise weightage and what are the changes in the study material. I'm again coming back to my, just a minute. I'll come back to my login page and then I'll again show you where what is mentioned. Again, I'm sharing my screen. And if you go to this was the BOS Knowledge Portal. Here you have to give your login. I logged in here and with my registration number and date of birth, I logged in here. And there you found MCQ practice tab. Now, a student was asking what are the changes in the study material. For changes in the study material, financial reporting largely covers Indian accounting standard, which was there in the old scheme as well. So all IND AS which were relevant in the old scheme are still applicable for your new scheme as well. But there are 2 chapters in the old scheme. There were 2 chapters in the old scheme which have been replaced by 2 new chapters in the new scheme. In old scheme, we were having accounting and reporting of corporate social responsibility expenditures, and another was integrated reporting. These two chapters have now been removed. Instead of these 2 chapters, we have 2 new chapters. One is professional ethics of chartered accountants, and second is your accounting and technology. With respect to your professional ethics, the manner of answer should be first in a scenario, you have to give the correct accounting treatment as per IND AS. After giving the correct accounting treatment, based on the scenarios or based on the facts given in the scenarios, you have to mention in case a chartered accountant who is dealing with the accounting of that particular entity, how should they respond? They should be fair, they should be correct in their treatment, irrespective of any pressure from the top management. That you have to mention. And in case they come within the pressure and they follow the wrong accounting, what will be the consequences which may occur? That is what the way that you have to answer in the questions related to professional ethics and of a chartered accountant. With respect to accounting technology, I expect students to go through the theory chapter properly and restrict your understanding and your preparation to that particular chapter. Instead of moving to any reference books and all, you can go through those chapters. Okay. With respect to section-wise weightage, we have already a tab here in this BOS knowledge portal, section-wise and skill-wise weightage. If we click here, we'll find section-wise weightage for each level: foundation, intermediate, self-paced online modules, and final. I'm clicking here for final. You'll get this financial reporting section-wise weightage, and this section-wise weightage. Earlier, we were having 7 sections. Now, in the new scheme for this paper 1 financial reporting, we have 8 sections. Our syllabus has been divided into 8 sections, and weightage for every section has been given. So student, though we are giving weightages, we have divided the whole syllabus in section, but it doesn't in any manner says that you have to go for selective study, because your questions will be asked in such a manner that there be a compliance of section-wise weightage, but still you won't get an opportunity to skip any particular section, because one question may carry more than one section. See, if we are having 1A and 1B, it may happen that section 1 is one question 1A is from section say section 5, and your question 1B is from section 1. So in that manner, you cannot skip any particular section. So as an institute, I would always advise that don't go for selective study. One reason is this. Second reason is every IND AS is somewhere linked to another IND AS. In case you go for selective study, it may happen that, for example, you are studying your standard on impairment. Before understanding the standard on impairment, you should be aware of standard on your property, plant and equipment, your standard on intangible assets, your standard on your property, investment property. So if you directly jump to standard on impairment asset, then you won't be appreciate which asset is to be addressed for to be assessed for impairment. So that's why it is very necessary that you go through all IND AS, and that to in a particular sequence, so that you understand each and every standard and appreciate the concept which you have learned in the previous IND AS. Okay. So here we have given 8 sections, and in 8 sections, one new section is based on this section 8 is on ethics with accounting concepts and technology in accounting, which I've already mentioned you. Okay. So another query which I was having, let me just stop my sharing and see the query. Okay. So these queries I have already answered. Let me go to recent queries. Okay. Why overlapping of time for recorded and live sessions? Why overlapping of time for recorded and live sessions? No, we are not overlapping any time. See, but this is only that when we are giving recording sessions, we are giving you more sessions to go through within those times. For example, if I am saying you after IND AS 1, till IND AS 1, we are having live lectures. After IND AS 1, we'll be uploading the recorded sessions of the previous batch. For 4 recorded sessions, we'll be giving you one gap. For example, your classes for financial reporting is on Tuesday, Thursday, and Saturday. In that case, if I upload it on Tuesday, then I'm not conducting any live class on Tuesday also, and I'm not conducting any live class on Thursday also. I'll be conducting that live class for resolving your queries on Saturday. In this manner, if I'm giving you 4 sessions to go through, but I'm giving you 1 week time also. So there won't be any overlapping, and this overlap, what we are going for recorded version because we are having less time. So that's why instead of 2 classes, we are giving you 4 classes to go through and then to address your queries in one live class. Okay. One student, I'll come to Sujay Kanwatkar, I'll come to your point also. One student asked, ma'am, do we have compulsory pass set A? For May 2024 examination, you have been given this relaxation that you can attempt for your self-paced online modules, which are compulsory as an eligibility criteria after this May 2024 examination and before enrolling for your membership. Okay. But for November 2024 examination, yes, self-passing, self-paced online modules, all the 4 sets A, B, C, D, is mandatory for appearing in your November 2020 examination. However, if you are a student who have already given 8 papers at intermediate level in the previous scheme, then but set A and set B are compulsory to you to qualify. Okay. So this was the query which was raised by Bujanuru Chandrasekhar. Okay, now we are moving to Sujay Kavatkar, and he has asked, can you tell us about the self-paced, how and when we should attempt the self-paced module of law and cost? Students, hopefully from 1st May, we'll be launching our LMS Learning Management System, the platform where you will be, videos have been uploaded for law and cost paper, and you can go for 40 hours mandatory learning. You have to complete that. After completing that, hopefully examination department will also start conducting the examinations of set A and set B by the end of first week of May. So you have to go through the website, institute website, and be in touch with the announcements of Board of Studies, and be in touch with the announcements of examination department also. For Board of Studies, what will be the platform, what will be your login ID, how you have to complete the classes, lectures, mandatory lectures, that will be mentioned in that announcement. With examination announcements, they will inform you when the examination for these set A and set B will be conducted, where will be conducted, what will be the manner of assessment, everything. They will inform you there with that announcement. So you have to be in touch. Soon will be, hopefully by first week of May, we'll be ready with everything. Okay. Okay, Abrakesh Mankad has asked, please check schedule for 27th. 27th, what do you exactly? I'm sorry, I'm not able to understand what was your query. Pratik Sharma was asking, when will be the advanced financial management classes? It shows some same timing as a financial reporting class today. I think they have mentioned for the recorded lectures. Let me just go through the schedule. I'll connect I'll just inform the concerned person to see what is the overlapping done. Okay. Right. Today was financial reporting class only. Okay. Abrakesh, when self module will start? I have already informed you, Rakesh Mankit, that we have already we are planning to launch it in first week of May. Hopefully by first May we'll be ready with the LMS. Whatever videos have been recorded, you can start learning through that. Okay, Bindu ji is again asking, sorry madam, there was a technical error. Could you please share the set A information for set A? See students, we are working on the LMS, and by first week of May, hopefully by first May, we'll start our LMS where videos for set A and set B will be there, and you can start your mandatory learning of ours. And you please be in touch with the announcements of Board of Studies and the announcement of examination department regarding these self-paced online modules, how to do this learning on LMS and how to appear for the examination. Soon we'll come out with those announcements and you have to go through that. Okay. Any other query you have, you please ask me. This is the platform which is there for students, and we also want you to resolve all your queries, whatever you have, so that we can address it and you go with free mind that, oh, okay, you know all whatever that. In case any other query which comes to your mind at later point of time, you can raise your query on BOS mobile app. We'll be addressing that. Okay, one thing. Second, students, for your upcoming examinations, so upcoming classes, please be ready with your recorded lectures wherever we have mentioned in the schedule. Because without going through the recorded lectures, you won't be able to get the maximum benefit of the live queries, which will be addressed for based on those recorded lectures. Okay. Hope just clear to you all. So we'll end the session now. Thank you, sir. Thanks for giving this insight on introduction to IND AS and overview. And so students, thanks for sparing your valuable time. Thank you. Bye. Sir, you're on mute.
Thank you.
Thank you, students.